This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Central Bank of Derby-a-thon, Bank of Japan coming up, Bank of England moments ago. I guess the Federal Reserve yesterday, nobody got out to buy tickets until this morning.
Exactly. It's kind of strange, and you kind of saw
Very
the market
strange.
kind of a muted response yesterday. But boy, we're off to the races here this morning with the S&P up 1.6%, the Nasdaq up 2% pre-market, Tom.
Great set of conversations for you to reset after the meeting. We start strong with Paul Donovan, UBS. We'll get to that in a moment. I've got a real question about austerity and the American difference, the American exceptionalism. We've got to talk to Paul Donovan about China as well. I'm going to get to it quickly here this morning. Good morning. Across the quarter, 99.1 FM Washington, Bloomberg 11.3 our flagship in New York City. Clouds yesterday.
Yeah.
It was like finally not California.
Exactly right. So maybe we'll get a little bit of rain here.
We'll do California music today.
Yep.
And 92.9 FM up in Boston. Good morning. Across the nation, somebody said, why don't you mention Sirius XM? Yes, I mentioned Sirius XM, Android Auto, Apple CarPlay, all these distributions. Summing up, we are humbled by the response nationwide. From the Interactive Broker Studios, our Bloomberg Business Flash, post-Fed, Lisa Mateo.
You got it. And futures, yeah, they're showing it post-Fed after the Fed's outsized cut. The market now pressing in another 70 basis points of rate reductions this year. So we have NASDAQ futures up more than 2%, 411 points. Dow futures up more than 1%, 482 points. We have S&P futures up about 1.5% at 93 points. We have the two-year yield 3.58%, down 3 basis points. The yield on the 10-year 3.70%, and that is little changed. Commodities, want to point out spot gold higher, $2,588 an ounce. We have Brent crude, $74 a barrel. WTI crude, $71 a barrel. Few companies making news. Apple shares up more than 1%. Sources saying the company is set to be warned by the European Union to open up their iPhone operating system to rival technologies or eventually risk significant fines. Then you have Microsoft up more than 1%. The company working with Anduril on combat goggles for the U.S. Army. It's a project could generate nearly $22 billion over a decade. And finally, Stellantis. Volkswagen posted significant drops in August new car registrations in the European Union, and that contributed to a sharp overall decline. Demand weakened in key markets. EV sales fell. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bank of England out here, and it's all coordinated. I'm in the camp, you know, folks. Jay Powell, central banker to the world. Mr. Bailey over in London, need to be careful. Must not cut too fast or by too much. Paul Donovan, I guess, can agree with that non-headline. Paul Donovan, chief economist, UBS, joins us here this morning. Paul, I want to go bigger, broader here and tie in all these well-deserved central bankers. And what I see is continental Europe and other central bank experiments comfortable with austerity, and the United States clearly is not. Do you presume the rest of the world will come towards America's expansionism of fiscal policy, or are we going to maintain an austere world and America exceptionalism?
Well, I think that when we look at Europe, I mean, there's a range, obviously, of acceptance of austerity. It's not an unambiguous approach. And of course, the unit of fiscal profligacy is the Truss, named after UK Prime Minister Liz Truss and the debacle that we had when she tried to do 2% of GDP of unfunded tax cuts. So it's not universal as a black and white distinction, I think. The issue, I think, with the United States is that up until now, there hasn't been an equivalent of the Truss debacle. You know, the markets have not disciplined the federal government of the United States for being on an unsustainable fiscal path. I don't think that you can assume that for the next decade that will still be the case. At some point, I think market discipline may well be exerted, but not for the foreseeable future, I would say.
Some headlines here, and they're all different. ECB different from Bank of England. Labor market looser but tight. by historical standards. Paul, restrictive policy needed for sufficiently long. Bailey says he has no idea what to do with Tottenham.
No, exactly. So, Paul, we put this all together, and I'd love to get your thoughts on kind of maybe the messaging you took away from the Federal Reserve yesterday after maybe a little bit bolder than expected 50 basis point rate cut. What was your takeaway from the messaging?
Well, I think there was a fear, perhaps going into this, that if they cut 50, maybe the Fed knows something that markets don't know. I think it's very clear from Powell's press conference, Powell doesn't know anything that nobody else knows. I mean, there isn't special knowledge from this particular Fed chair. I think the dissent, actually, for me, was interesting. The dissent process, I often feel, is a managed process of communication. How many dissents do you allow, as it were? And the fact that we had the first Fed governor dissenting in 19 years, I think, was a clear attempt to say, look, yes, we're going 50, but it's not a panicked response. We're scrambling to catch up because we should have been cutting rates 4 or 5 months ago. But there's nothing wrong with the economy. And that's what the dissent was. And whilst I don't put a lot of faith in the dot plots, I think it's one of the worst decisions the Fed ever made was to publish these things. But the dot plots did also signal that there wasn't really an overwhelming conviction to go for 50. So I think Powell just sort of pushed in that direction, and it's not really signaling that there's anything wrong with the wider economy.
So, Paul, what do you expect the ECB, the Bank of England, just kind of going forward over the next several months, several quarters? How do you expect those central banks to react?
Well, for me, the central banks around the world, at least the well-run central banks, are simply following inflation down. Okay. So they're trying to stabilize real rates more or less. Now, there's a lot of debate about what is the real rate. There's different ways of deflating rates. But what that means, I think, is that there is this almost commitment to a steady pace of rate reduction to sort of catch up with the declines in inflation that we've been seeing. So I think that if we look, say, at the Riksbank or the ECB or the Bank of England, quarter point to quarter reductions, absolutely fine. Swiss are obviously slightly different because they've got less room to cut. But even the Swiss, I think, will cut again. Bank of Japan in a different place. Why is it in a different place? Because its inflation narrative is in a different place. They're not following inflation down, they're following inflation up over there. So different narrative.
Paul, I got renminbi, 7.06 yuan per dollar, a smaller number, stronger renminbi. 699 is not a 700. I'm looking right now. You can do this, folks, on the Bloomberg Professional Service. The Indonesian currency really breaking down to some new strength. Should we be concerned about a dollar weakness that 98.2% of our listeners and viewers have never seen?
I don't think we need to be too concerned. We're not seeing disorderly markets. The dollar has been overvalued, still is overvalued it's been overvalued for years. It's still overvalued against, fair value models. Now, economic models of currencies only work by accident. You don't use these as predictive models, but it does say that, it's not unnatural that the dollar is perhaps weakening somewhat in these circumstances. I don't think we're at levels of currency move which are going to have major economic ramifications. This is not something which has got a huge issue as far as the global economy is concerned. It's just sort of the normal give and take of foreign exchange dealers.
So, Paul, as you think about the U.S. economy here, are you comfortable that this is an economy that is, in fact, having a soft landing?
Yes, is the short answer, at least for now. Because the thing with the U.S. economy is the middle-income consumer, what being British I would call the middle class, that's the key group.
Yep.
And the middle-income consumers in a fairly reasonable pace at the moment. If you're a middle-income homeowner in the States, your inflation rate is 1.2, 1.3%. Because the weird way you guys calculate inflation with owner's equivalent rent doesn't actually apply in the real world. You've got household income rising somewhere between 3.5% and 4%. You've got a decent increase in your real disposable income at the end of the year. And that's sort of buoying things along. And this is the critical thing. You don't have fear of unemployment. There may be a slowdown in hiring going on, that I concede, but there is no acceleration of firing. And that gives consumers the confidence to spend.
Paul Donovan, I got 45 seconds. I'm being rude to your expertise. Can Beijing pivot to a new policy that accepts FDI and increased investment?
I think they will struggle to do that with the current political direction.
Okay, we'll leave it there. Paul Donovan, thank you so much with UBS. Can't say enough. The joy of starting with Paul Donovan here after a Bank of England steady here. Ukraine out with headlines, the Bank of Ukraine out with headlines on their rate and others. We're watching currencies. I've got dollar weaker. Somebody said the other day, what's the one thing you're watching? The Bloomberg Dollar Index gives me the best information, BBDXY, because it's EM based. But I am watching the traditional DXY index. To break under 100 would be a big deal. Futures, S&P futures up 94. Dow futures up almost 500. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, Israel's defense minister declared a new phase of war as Hezbollah officials and Lebanon state media say explosions went off in Beirut and Lebanon in an apparent second wave of detonations of electronic devices. It said walkie-talkies and even solar equipment detonated a day after hundreds of pagers blew up. Lebanon's health ministry says the exploding telecommunications devices killed at least 26 people over 2 days and wounded more than 3,000. Meanwhile, at a White House briefing, National Security Communications Advisor John Kirby expressed concern the attacks could jeopardize U.S.-led efforts to broker a ceasefire between Israel and Hamas.
We want to see the war end. And everything we've been doing since the beginning has been designed to prevent the conflict from escalating.
Kirby says the U.S. was not involved in the attacks over the past 2 days. A new poll shows Kamala Harris holds an edge over Donald Trump in the battleground state of Pennsylvania. According to the survey conducted between September 11th through the 16th by the New York Times and Siena College, Harris leads Trump 50% to 46%. The margin of error is plus or minus 3.8%. Meanwhile, the International Brotherhood of Teamsters is declining to endorse a candidate for president. Bloomberg's Amy Morris reports from Washington.
It is a blow to both Kamala Harris and Donald Trump. Teamsters General President Sean O'Brien released a statement saying that neither candidate was able to make serious commitments to the union, quote, to ensure the interests of working people are always put before big business. Now, the Teamsters released internal polling data showing members had initially favored endorsing Biden over Trump. But after Harris became the nominee, the majority of respondents backed Trump. In polling conducted a few days ago, 58% supported endorsing Trump, compared to 31% for Harris. And you may recall O'Brien spoke at the Republican National Convention in July, the first time a leader of the union has done so. Amy Morris, Bloomberg Radio.
Finally, this morning, a judge in Washington, D.C. will sentence 5 people accused of helping lead the infamous January 6th initial breach at the Capitol. Prosecutors want 9 years in prison. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Into the data check right now. Paul mentioned it earlier, and I've never seen this, Paul. Press conference, time to digest. Nothing really happened yesterday. Snooze fest in equities. Moonshot now. 2.09% up on NASDAQ 100. Paul, I'd never seen it.
It's interesting. And Tom, I'm going to call out the VIX for you here. We're now below 17.
Thank you.
16.6 here, so down 1.6 big points here.
The 10-year real yield, 1.60%. An exceptional Thursday for you. Stay with us across our 3 hours from New York City. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures surging after the Fed voted to lower interest rates by a 0.5 percentage point. Meanwhile, the BOE maintained its key interest rate at 5%. So let's start with futures. We have NASDAQ futures up more than 2%, 406 points. Dow futures up more than 1%, 465 points. And we have S&P futures up more than 1.5%, 91 points. We have the 2-year yield 3.59%. That's down 2 basis points. The yield on the 10-year 3.71%. And that is little change. To currencies, we have the dollar stronger, the Japanese yen weaker, euro, British pound stronger, Bitcoin up 3.74% at 62,000. That's
Still
an
not buying.
outsized Fed cut. But here's the trickle-down effect. Checking in with the crypto-linked currencies companies. We got to hit Coinbase Global up more than 3.5%. Marathon Digital, Riot Platforms
How's
up
my
more
Doge
than 4.5%.
Doge.
Doge, you got to get to the Doge. How about CleanSpark? 5.5% up more than other stocks.
It's 10 a.m. already.
Furniture maker Steelcase, it gave a third quarter revenue forecast, fell short of estimates. And finally, after the close, stay tuned. We're going to get results from Home Builder Lennar, FedEx too. FedEx sales seen holding steady despite weak demand. Those shares up more than 1% right now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo.
I'm old school. FedEx matters. Lisa, thank you. Paul, I'm sorry. FedEx matters.
It does. I mean,
it's a snapshot of the country.
I agree 100%. I mean, you got a million packages in front of every door all over the world.
Great set of conversations the last couple of days. Thank you to our team of interns for that. But we got the right guy at the right time. Eric Freedman is Chief Investment Officer at US Bank Asset Management. We're thrilled he could be in studio. He's just been someone who's given us bull market patience and a lack of fear, diminished fear over the recent quarters. I'm going to say we've never seen this. I did a fancy Fed funds target rate Fibonacci study to get back to the middle tendency. The Fed can cut 10 measured cuts. They cut 2 yesterday, 50 beeps. How do you adapt to this as a long-term investor?
Yeah, the biggest thing for us, Tom, is really getting people out of cash. That is remaining to be the sort of hurdle for our book. We
SP up 18%, cash up 4%.
Yeah, exactly. Yeah, people are saying, hey, nostalgia. We've got a yield for once that doesn't require a bunch of duration or risk. And so I think that this is a push for people to really establish what their investment targets are. Again, getting away with 5% is one thing. Getting down to the Fed's terminal rate at, let's call it 2 3/4 or 3%, that's a very different set of returns. So we think our most important dialogue with clients is to really get them migrated out across the spectrum. Again, as you know, we have been more bullish equities. We actually sold into strength last week. Wish we hadn't, perhaps this morning, but back to more of a neutral position for us, a little more credit exposure. That's the way we're playing the current environment.
Credit. So how much credit risk are you willing to take? I noticed that if I go to the INGO function on the Bloomberg terminal, it gives me all the total returns for fixed income. U.S. high yield has been by far the best performer this year. That's a lot of credit risk. Are you with that level of credit risk, or are you thinking something different?
Yeah, there's a couple things, Paul. Number one, if you look at the overall level of spread, we're about 200 basis points under long-term averages. That's actually a little tighter than we'd like, but there's precedent for it to go lower, especially as rates come down. So I think the reaction you're seeing in small caps as well as in mid caps suggests that there's a little more tightening to go. We also think that one area that's actually really ignored is the longer duration side of municipals, which is a little more esoteric, but it's a part of the environment that we think is probably undertouched, underleveled. Also, high yield munis, which is not necessarily for everybody, but again, unless we see a real deterioration in tax rules, that's a decent spot to be in as well.
What do you do as a strategy into 2025? Tech's been behind here. Is this a new permanent condition, or is it an opportunity given what the fuel that the Fed gave us yesterday?
Yeah, I think it's more of an opportunity.
It's got to be.
Yeah,
because
it is.
If rates come down, their growth rates become ever more valuable.
Yeah, they do. I think the biggest thing for investors that have been really more sidelined or in cash is the catch-up trade. So number one would be
what is that?
Mid-caps in particular, domestic mid-caps, small caps, also parts of Northern Europe we think are decent spots to be. I think if you look at the overarching theme across client portfolios has been, look, large cap tech continues to be the thing that works. More of a rotation into equal weighted S&P has helped, but we think that small caps, mid caps in particular, tend to be that sweet spot for investors.
Lisa, should we do a remote from Oslo or Stockholm?
Stockholm.
There's some tech capital in Norway, which is like halfway to the Arctic Circle. I can't remember the name of it right now.
All right, so
what's in Northern Europe, Paul?
I don't know.
What do you buy? An ETF?
Sweden, Denmark. You look you look at Germany, the parts of Northern Europe that, again, Germany has been, of course, a bit of a basket case economically, but things are actually starting to, at the margin, improve. They're a little more,
listen to you.
Yeah, a little bit of improvement in labor law, which is a good thing. But again, that's a spot that we think has been underloved, more of a value factor across Europe that could be worth looking at for investors here.
All right, Eric, now that we're past kind of intense Fed watch, maybe the focus is going to go back on core earnings in this marketplace. How do you guys think about earnings growth going into 2025?
Yeah, the biggest thing we're worried about, and Bloomberg does a great job of covering this, is the earnings growth expectations for 25 are still at 14.5% off of a base this year of up 10. That's a pretty lofty level. That's not normally distributed across sectors. So the things that we think will do well that are probably a bit underloved are consumer discretionary, growth-oriented consumer discretionary, and that's probably the crux of our focus right now. But if you look at
Is Apple a consumer discretionary?
It is.
Asking for the 4 cell phones on deck at home?
Exactly. Yeah, the 3 kids at the Freedman house are asking for the same thing.
That's unbelievable.
Yeah, exactly. Yeah. So I think if you look at that 14.5% rate, one of the considerations that we have to really dial into is where are the vulnerabilities. CapEx spend from companies is the biggest thing we're focused on. Again, not just big data or cyber, but also, again, will they see upgrade cycles in PCs? Will they see a continuation of other AI-generated spend? That's the key for us.
One of the areas that you guys are not participating in, looking at your notes, is energy. And we got WTI crude here at $71 a barrel here. What's the energy call here?
Yeah, I think the biggest thing with energy, and it's the broader hydrocarbon complex, I love when Tom refers to it that way, is the idea that, look, a non-consensus view for next year is that inflation hangs around. Okay. That's something you heard a little bit from the ECB. You probably heard a hint of that for the Bank of England this morning. And also there's other sell-side providers saying, hey, look, shelter costs as well as the, let's call it the base effects of inflation could hang around. So the only thing that's really dislocated in markets right now has been hydrocarbons. And that is, we think, probably a tight stop trade to play with, if you will, but we're not quite there in terms of an investment thesis that's more long-term in nature.
How do you expect this Federal Reserve to go now, I guess? Is this something that they've done 50? Did they step back? Did they kind of get into a more normal cadence of maybe, 25 basis points every meeting? How are you guys thinking about that? Or shouldn't we not worry about that?
Yeah, I think that this is the first time we've seen the Fed actually acquiesce to the market versus the market acquiescing to the Fed. So that's true up until 2026. If you look at where the dot plot is versus markets, they're really in line through 2025. So this has kind of been priced in, if you will.
Okay.
I think the key thing is, where is that terminal rate? Again, for us as long-term investors, to Tom's earlier point, we care about where interest rates settle out over time. You'll notice yesterday, really not talked about, there was a modest tick up in the long-term Fed dot plot up to closer to 3%. So that for us is probably the area that we're most focused on. Does that change to like 3.25? That would be more of a concern than the market's pricing right now.
SPX at 12 months, where are we?
We think we're probably 8 to 10% higher, but we think the rotation is very different. Large cap
so
tech.
That's 6,000 something.
Yeah, we'll be that way on a total return basis,
right.
and again, the complexion of what works is different.
Do you at US Bank see exuberance out there? I don't see it. Are we just benumbed by this manufactured bull market?
I don't think there's enough, let's call it broad-based hysteria, Tom. There's probably more of a shorter-term focus on things like AI, but if you look across the broader landscape, we're really not seeing outside of the somewhat loftier expectations for next year, which are achievable. We're not talking about San Francisco 2000, 1999 types of prices.
Right. Eric Freedman, thank you so much with US Bank, the Chief Investment Officer, US Bank Asset Management. Got to do a data check. Paul led with the VIX. He's right, in a stick and more. 16.64. SPX up 1.6%, points. Dow near 500 points, not there. NASDAQ up 2.05%. Small stocks leading away because of Eric Freedman. Okay, Lisa, I'll do it. Good morning, Alex Steele. BitDog 62,000. Moonshot on its way to 70. Don't take that as a bet.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have futures rallying after the central bank opted for a bolder start in making its first reduction since 2020, a 50 basis point interest rate cut. More economic data out today. We'll get a read on initial jobless claims, the leading indicators, and also existing home sales. Economists say U.S. home resales probably dropped in August. We shall see. We have NASDAQ futures up about 2%, Dow futures up more than 1%, S&P futures up more than 1.5%. We have the two-year yield at 3.59%. That's That's down 2 basis points. A yield on the 10-year 3.72%, and that's up 1 basis point. A few companies making news. Boeing requiring a lot of its salaried workers to take unpaid leave to preserve cash because those factory workers in Seattle and Oregon still on strike. Shares up more than 1%. And on the flip side, Amazon boosting the pay of its hourly warehouse workers by at least $1.50 an hour.
Wow.
And they're also adding Prime membership to their benefits. They get Amazon Prime, up nearly 2% their shares. And finally, T-Mobile up nearly 1%. Struck a deal with OpenAI. It's going to build artificial intelligence platform to help the company gain and also keep customers. That's a Bloomberg Business Flash. Tom and Paul.
Paul, I think that Amazon announcement is not a small matter. What I've been told by people that listen to the show, watch the show on YouTube, nationwide, Amazon sets the local salary.
Sure.
They got all those warehouses. You tick them up $1.
Yep.
Let's say it's a 6% rate. No, I can't do the math. 1 divided by 18, whatever that number is.
Yep.
4% raise, whatever. That permeates every single society out there.
I couldn't tell you what the minimum wage is in this country, but I know what Amazon's paying.
Yeah.
That is it, the market.
That, to me, frankly, is maybe the news item of the day. Lisa Mateo, thank you for that. This is well-timed, to say the least. Todd Jablonski joins us now. God, he's got a fancy title.
I know.
Head of Asset Allocation, Principal Asset Management, Senior Vice President, picking up the pieces after a soft landing Fed meeting. Todd Jablonski joins us right now. Now what? How do you change your asset allocation with a 3-year horizon after the history we witnessed yesterday?
I was surprised by the 50 bip cut. I thought it was going to be 25. It was 25 first on the way up. So when it came in at 50, it was certainly a bit of a surprise. But it says to me that investors can look at stocks, can look at credit, can look at some of the risk-on areas of asset allocation that there was some worry about. And you can look at with some comfort and say the Fed's easing. They're providing easier financial conditions. This volatility of stocks is low. The volatility of spreads are low. In fact, if you look across all of the elements of financial conditions, we were waiting on the Fed to come through to make things easier. And lo and behold, it has fallen from the sky. And now you have 50 bips of easing due to some economic slowing, but it makes me look more optimistically at equities, credit, and some of the better parts of the complex.
You're not doing a strategy thing. I mean, Sweeney, I get it, you're doing a buy-side thing. But the bottom line is everybody's got to recalibrate their bull market today. How do you do that?
I think you stick with your big cap tech first and foremost.
Says the man from Seattle.
Yeah, it's transformed my city, and it can transform your portfolio.
What does the nation not get right? They're gloom about Apple. They're all going to. What's the latest gloom on Apple? They're not going to sell any phones.
Yeah.
Amazon, 5-day. Do you work a 5-day work week out of Seattle?
I do. I'm in the office 5 days a week.
There you go. Jesse got it from there.
I know.
What do we not get about the pixie dust in Seattle?
The big can keep getting bigger. The 7 largest companies in the United States went from $1 trillion a couple decades ago all the way up to about $16 trillion today. That's worth more than every single company in Europe combined, more than every company in China combined. And they can continue to get bigger. They can enter into new markets. Who wants to get into a resource war with one of those technological giants and all the cash on their balance sheet? Certainly not me. What I'm thinking is that the big can continue to get bigger. And I see neither the political willpower on the left nor on the right to be willing to tackle it from a regulatory standpoint. So my equity overweight and mega caps remains in place.
Can you see Todd at Root in Seattle?
Sure.
Root is the most earnest coffee place.
Yep.
Like they bless the beans before they make
It's a whole thing out
It's a whole thing out there. I don't get it.
Yeah. So Todd, all right, we got big tech. That's certainly been a great story. How about for the folks that are looking for, I don't know, value? Do they think small cap? Do they think mid cap? Do they think financials? Do they think sectors that have underperformed? Are you in that game at all?
You're at like U.S. large cap for growth and momentum. I feel the same way about Japan and India. But for investors who are looking for value, I think the place to go is Latin America.
Okay.
You're seeing it in Mexico, Brazil, and Chile are probably the 3 cheapest markets that you're going to find on sort of a global basis. They've been cheaper, less than 20% of the time in the last 20 years. So you find value opportunities there, but for a reason. Typically allowing political risk really in Mexico is what's driving investor sentiment. You saw the peso take it on the chin earlier this year with the election of Claudia Sheinbaum. In Brazil, it's all about the pace of growth in China. As you start to get deeper into Latin America, Brazil, Chile, they tend to be more connected with the Chinese economy. And I think you'd be looking for a Chinese turnaround or signs of optimism on policy there that could unlock value in Latin America.
Something in your notes jumped out at me because I used to sell these a little bit for a living, preferred stocks.
Yeah.
Talk to us, why would an investor look at a preferred stock and why do you guys like them?
We just increased our overweight because high yield debts, non-investment grade corporates have done remarkably well. But I also want to hedge my bets a little bit. I don't mind coming back a little bit on my speculative lending and instead looking at preferreds. Because if you look across multi-sector credit, you get a lot of rates and you get a lot of spreads. A lot of rates, a lot of spreads. And they kind of move in lockstep no matter where you are in the bond market, except when you buy preferreds.
Right.
What I'm interested in about preferreds is from a diversification standpoint. They do perhaps a better job than any fixed income category, smoothing that out with the idiosyncrasies, easy for me to say, of the financial
Lisa's
market.
the only one in the studio that can pronounce that.
So that word, the word's difficult to say, but preferreds, they give you that idiosyncratic exposure and diversification and an element where I want it.
Were you at Caron at NYU with Peter Carr and when Merton was, helping out? Rubini was walking by and all that.
A little before my time, but I walked the same halls.
Magic pixie dust there. When you look on a quant basis, where we are, to me, post-pandemic, this is nothing more than an exercise in readjusting our terminal value, how far out we look. And those winners in Seattle, as a generalization, they've got a terminal value that we're pulling in because of their excess cash flow. Todd Jablonski, where's your new terminal value?
Look at the terminal sort of level of growth in the U.S. and the terminal level of short-term rates. They're probably going to finish right in sort of that 2.5% to 3% level. But in terms of a terminal value of the big cap tech trade, we haven't seen it. I think that we're still in the early innings on that big cap tech trade.
So our listeners and viewers, should they take on any Mag 7 that they see here, Berkshire is a Mag 8, should they be looking at saying, forget about a 1 year, 2 year analysis, I got to look out 3 year? Or dare I say, can you go out past CFA 7 years?
Oh, sure. Some of the best equity strategies we own have 20% turnover. That means they got to be looking at least 5 years out. Certainly from a multi-asset perspective, you can put on a hat that says, yes, looking 5 years out. The rise of mega caps in my 25-year investing career is the biggest thing that's happened to capital markets. The biggest. Think about it. It's created a whole new asset class, mega cap tech, in just a couple of decades, bigger than, say, by orders of magnitude than the whole small cap market. I think that feature continues over my investing career over the next decade.
Your thoughts on Tim Cook, on Apple post Tim Cook?
I think Apple has its own, walled garden? And that walled garden is a unique place where, again, value can be created across a very, very loyal cohort of consumers. It's an interesting business.
You're based in Seattle. Amazon just said they want all their employees back 5 days.
There you go.
What does that mean for Seattle? Are there people in Seattle or are they out in some suburb somewhere? What does it mean for the city of Seattle?
The Amazon folks are right in downtown Seattle.
Okay.
I think it's great for the civic enterprise that is Seattle, Washington. I think the mayor would echo those sentiments. That kicks off a ton of small business downtown, a ton of entrepreneurs, a ton of lunch spots, a ton of places that we as business people
Could you imagine
frequent.
doing NYU quant work from home?
Oh, heavens no.
It's insane.
It's heavens no. I wouldn't want one. I'm not sure I'd want one. The people and the knowledge that come from the proximity to smart humans is just invaluable in my mind. And it's available, and I'm excited to hear that news to get more people in downtown Seattle.
Great stuff. I mean, I love Seattle. Great town.
Should we?
I think the football stadium looks the best on TV. The Seattle football stadium just looks
They just
great.
do that for Mina Kimes.
And they're so loud out there.
I mean, Mina is nuts over at ESPN about the Seahawks.
Yeah.
She's great.
When she was here, she's like,
Seattle's a great town.
Seattle, move there.
I think
okay, Mina.
Boeing should move back. I'm just saying.
I'm
corporate
in the same.
C-suite.
What do you think, Todd? Quickly here, Michael Barr's coughing. That's always a bad sign. Todd, should Boeing move back to Seattle? I'm strongly in that camp.
I'd be delighted to welcome them back home. They have a substantial presence in the Pacific Northwest,
Right.
even though the headquarters has moved around. But it'd be good to get some of the white
They'd sell
collar jobs
uncountable
back, too.
jets, pack rim, just with that move alone. Don't be a stranger. Todd Jablonski saying thank you. Bring Mina with you next time with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Lebanese health ministry reports at least 20 people were killed and hundreds others injured when a number of walkie-talkies simultaneously exploded yesterday. This after at least 12 people were killed and thousands more wounded Tuesday after pagers used by members of Hezbollah simultaneously exploded across the country. The militant group and Lebanese officials have blamed Israel. Former President Donald Trump brought together nearly 20,000 supporters at a campaign rally in Uniondale, New York last night. Trump continued to push the debunked claims about the mostly legal Haitian immigrant community in Springfield, Ohio, that they eat pets.
I'm going to go there in the next 2 weeks. I'm going to Springfield and I'm going to Aurora. You may never see me again, but that's okay. Got to do what I got to do. Whatever happened to Trump? Well, he never got out of Springfield.
Meanwhile, second gentleman Doug Emhoff campaigning for his wife last night in New York. The husband of Kamala Harris responded to remarks from former Trump press secretary, now Arkansas Governor Sarah Huckabee Sanders, who said that the vice president does not have anything to keep her humble because she does not have any biological children.
They said that somehow because Cole and Ella aren't Kamala's quote-unquote biological children, that she doesn't have anything in her life to keep her humble. As if keeping women humble, whether you have children or not, is something we should strive for. It is not.
Earlier, Vice President Harris called on reforms to fix America's broken immigration system, urging there is a way to create a pathway to citizenship while keeping a secure border. Finally, on the president's schedule, President Biden will speak at the Economic Club of Washington, D.C. today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
The mayor of South Bend, Indiana, scheduled to be with David Gura here pretty soon coming up. Rich, how many minutes away do we think we are? Got any idea on that with the Secretary of Transportation? Any idea how far away we are? I'm getting silence from the control room. We got a minute, 20 seconds left here. Is that enough, Paul, to talk about the Detroit Tigers?
No,
they're
never.
still in it.
Is it? I mean, this is magnificent. I mean, you gotta, you're gonna buy merch if they make it.
Yes.
You're gonna buy Detroit merch, and they're gonna play. They won't play the LA Dodgers. They'll probably play the dreaded Yankees.
Oh boy.
What do you think, Michael Barr? I mean, do they have an Alan Trammell?
I tell you, once you make it in the playoffs, if you got to go up against the Yankees, I'll be honest, that's a tough climb. And congratulations to the Yankees. They got a wild card spot at least. They beat the Mariners last night.
They got a wild card spot. They're like in
West
first place, right?
Rich's favorite general manager.
Yeah.
Yeah, there we go. We're going all the way.
It's fun. It's the best time of year for baseball. Going into the 2 out of 3.
Great time of year. You got
series.
football,
I'm
you
nuts
got
about
baseball,
the
you got all kinds
I
of
watched
stuff.
Scooball last night. He's like the second coming of Roger Clemens.
Oh yeah? Okay.
Yeah, not quite the control, but he's good. I mean, Barr got me into this. It's his fault.
Yep.
See?
They're gonna bring out all the troops here if the Tigers get into the playoffs. Good morning in Detroit. Good morning on Apple CarPlay, on Android Auto as well. Good morning on radio across this nation and YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures surging. This after the Fed chose a more aggressive reduction than investors had been expecting just a week ago. Meanwhile, the BOE kept interest rates on hold at 5%. We have NASDAQ futures up more than 2%, Dow futures up more than 1%, S&P futures up more than 1.5%. The two-year yield at 3.58%. That's down 4 basis points. The yield on the 10-year 3.71%, and that is little changed. We have shares of Darden Restaurants, the owner of Olive Garden, up more than 8%. It's on improving sales trends. It also announced it's going to partner with Uber for food delivery, and that's starting with Olive Garden later this year. Breadsticks for everyone. British fashion retailer Next raised its guidance for fiscal 2025 again. It's pointing to the strength of its full price sales over the past 6 weeks, but shares down more than 2%. And finally, United Airlines has a big appreciation for Taylor Swift. At a recent conference, the company says they've seen a 25% or more increase in demand on United flights during Swift's weekend concerts. That's a Bloomberg Business Flash. Tom and Paul.
Okay, I'm looking here. Olive Garden, 2 Times Square. I guess that's where we go.
Yeah,
Times Square,
yeah.
Olive Garden. Do you know I've never been?
Me neither.
Breadsticks. That's what I've heard. Everybody says.
Breadsticks and the salad.
Okay. And thank you.
Yes.
Thank you for our Olive Garden report this morning, Lisa Mateo. Bloomberg Surveillance this morning. We're brought to you by Interactive Brokers, their bond marketplace. Access Interactive Brokers' vast selection of over 1 million global fixed income securities, no markups or built-in spreads, low transparent commissions. Learn more at ibkr.com/bonds. It's our Balance of Power study of the election to 2024. Joining us right now, David Gurr. David, in the segment, which I call Vote Early, Vote Often, we're trying to go off the beaten path, like your observation that Arizona matters. I got to go back to the heart of the presidential campaign. I can't make any common sense out of the polls. My head is spinning over the polls. Create order here, please.
I think that the broad takeaway is the race is incredibly close, and it's going to be incredibly close. And if there's anything to kind of drill down on, there's this kind of disconnect between what we're seeing at the national level and what we're seeing in some of these swing states. So take, for example, what we got this morning, this new poll from the New York Times, Philadelphia Inquirer, and Siena College. Looking at it nationally, it's tied 47-47, well within the margin of error. You look at Pennsylvania, 46% of likely voters say they would vote for Donald Trump if the election were today. 50% say they would vote for Kamala Harris. Again, that's within the margin of error. So again, top line, incredibly close, but we are seeing some movement here at these swing states. That said, it seems to be vacillating quite a bit. I wouldn't read too much into it. Your confusion, if I may say so, is shared by a lot of folks here, Tom.
Boy, if I were running either of these campaigns, I would have no idea what to do. Am I focusing on 7, 10, 15 million voters, and that's it? The swing voters, these independents, I guess?
I think it's even fewer than that, Paul, but you do see these campaigns doing that and returning to kind of the same places over and over again, and I think we'll continue to see that going forward to the election.
David Gurr, please stay with us. Greatly appreciate that. We'll have much more. Futures up 94. We welcome all of you on YouTube. Subscribe to Bloomberg Podcasts. Thrilled with the turnout yesterday for the Fed Decides. Now a conversation, John Farrow, with the Secretary of Transportation.
And whether you think this could serve as a model, an example for future integration in the industry.
Well, thank you. Yeah, we believe it really does represent a new chapter in the way the DOT approaches both consumer protection and competition. Our department has a lot of authorities, and in my view, that means a lot of responsibility when it comes to competition. I think the Department of Justice's role is well known and well understood. The Department of Transportation's role less so, partly because the department has not been very proactive over the last 30 years or so as these airline mergers have come along. But we are concerned with competition, and we are also concerned with consumer protection. And so When this deal came before us, we saw that the Department of Justice did not intervene. We still wanted to make sure that there were protections in place, which really come into two categories. One of them has to do with service itself, making sure that in places like inter-island service in Hawaii, that nobody is made worse off because of this deal. But secondly, consumer protections that are in line with what we're trying to do more broadly for airline passengers. Things like making sure that there's family seating available. Alaska does that. Hawaiian had not. We want to make sure it's the better and not the worse of those two, and so they've committed to that. And then probably the most new, and I think one of the most important things that we're doing, the rewards program, and making sure there are provisions related to that points and miles system too. That really is breaking new ground for us as a department, but it's increasingly a very, very important part of the customer experience, and it's looming larger and larger financially too. So we wanted to make sure it was contemplated in this agreement before we approved of the merger.
Secretary Buttigieg, could the DOT have done anything different when it came then to JetBlue and Spirit, given you're now likely going to be using this blueprint?
Well, of course, every proposed merger is different. It is evaluated on its merits and the impacts that it could have to competition. In that case, the DOJ took action based on a real concern about what would happen on many routes, and our department took the step, again, something that our department hadn't really typically done in the past, of aligning ourselves with that and supporting that action. But yeah, I do think there are cases where if it's not something that just outright must be prevented by the analysis of competition law, still is something that you need to make sure it goes forward on terms that are consistent with our responsibility to support the public interest. And those public interest determinations, a lot goes into that, a lot of market analysis, a lot of legal analysis. But the sum total of it for passengers should be a better passenger experience and some assurances that this will mean a level up to the best rather than a level down to the worst of two worlds when you have multiple airlines coming together.
Well, I guess I'm asking because Hawaiian Air really needed this cash infusion, the same way Spirit Air desperately needs a cash infusion. So why is the administration willing to let one country get the boost one airline get the boost they need and not the other?
Well, again, there's a lot that goes into the competition analysis. A lot of it has to do with the loss of competition on key routes, evidence informing DOJ and us in a separate but somewhat overlapping scope of analysis. What happens to prices that consumers face? And look, part of why this is a concern is because of what's happened over the years. You know, during the period when America went through the debate over deregulation, which led to our modern airline system, a lot of the people involved in that policy were confidently predicting that in the future there would be about 100 airlines in the United States. Instead, we've seen merger after merger, lots of consolidation, and so it's very important to take a very hard look anytime there's a proposal to go from more airlines to fewer airlines in a country that already has so few.
Secretary, we're talking about fewer airlines, et cetera. We're having a question about whether we're going to have fewer planes. What's the threshold for the United States government to subsidize Boeing at a time where there are real questions about its ability to continue to invest and its workers are striking?
Well, Boeing has historically been an aerospace leader, right now encountering a number of issues related to quality and safety that the FAA has required them to demonstrate how they're going to address, and, as you mentioned, labor issues as well. If you look at how Boeing competed so well in the past, it had to do with a focus on quality and on safety. And I believe that's absolutely compatible with doing right by workers and with Boeing's place in America's economy. But again, the most important thing, certainly from a Department of Transportation perspective, is that the safety and the quality are there, because everything else sort of gets multiplied by zero if you have those kinds of problems that can, sure, they can shake the market, but the most important thing is the safety of the traveling public.
Mr. Secretary, appreciate your time this morning. Hopefully we can have a longer conversation next time on some big issues. Thank you, sir.
John Farrell there with the Secretary of Transportation, the former mayor of South Bend as well, Pete Buttigieg. Futures up 93, Dow futures up almost 500. As Paul Sweeney mentioned, a lift to the market yesterday, up 490 points. Let me do a data check here. I got to go with Bitcoin now, up 2,400 points. David Gura on that yesterday.
I know.
53,000, I think he went long.
Yep.
62,000 there. Huge bull market feel this morning. The real yield, 1.57%. I'm watching dollar carefully. Right now, green in the screen, dollar fractionally stronger. A bit of a surprise there off of a rate cut that we saw yesterday. We have a constellation of guests coming up. Please stay with us on YouTube. Subscribe to Bloomberg Podcasts. From New York City, this is Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, picking up the pieces after the Fed. What a meeting yesterday. Thanks for the many comments, the commitment of Mohammed El-Arian to be with us for the entire show. Paul, you know, I'm the slowest guy in the room. Bramo knows exactly what he's doing. He's just killing time to get the write-off before Patriots Jets. I mean, that's all Mohammed's doing.
Big game tonight.
Big game tonight. Good morning, Bloomberg 1130, the tri-state area. All of you driving on Android Auto, Apple CarPlay, and the rest. When you get to the office, YouTube, thank you for the response yesterday on YouTube. You subscribe on YouTube to Bloomberg Podcast. Look for Lisa Mateo. We lead with her, of course. And, you know, that's where it's happening. We're doing this whole distribution thing, this digital modern thing. A guy like Lachman Achathan is like, oh, my God, it's cosmic. It's so different than, you know, KDKA Pittsburgh or KMOX St. Louis. We say good morning. We'll get to this quickly here. Bloomberg Surveillance brought to you by Cohn Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. Right to it with our interactive brokers, Bloomberg Business Flash, Lisa Mateo.
And we've got futures really surging after the Fed's outsized cut. The market now pricing in another 70 basis points of rate reductions this year. Meanwhile, the BOE maintained its key interest rate at 5%. We have NASDAQ futures up more than 2%, Dow futures up more than 1%, S&P futures up more than 1.5%. The 2-year yield at 3.58%. That's down 4 basis points. The yield on the 10-year 3.71%, and that is little change. To commodities, we have spot gold higher, $2,590 an ounce. We have Brent crude at $74 a barrel. WTI crude at $71 a barrel. Few companies making news. Apple, their shares up more than 1.5%. Sources say the company set to be warned by the EU to open up its iPhone operating system to rival technologies or eventually just risk significant fines. You have Microsoft up more than 1.5%. It's working with Anduril. It's on combat goggles for the U.S. Army. It's a project could generate nearly $22 billion over a decade. And finally, Stellantis Stellantis and Volkswagen, they posted significant drops in August new car registrations in the European Union. That contributed sharp overall decline. Demand weakened in key markets, and EV sales, they also fell. That's a Bloomberg Business Flash. Tom and Paul.
Yeah, thanks a lot, Lisa. So folks, the messaging yesterday by the Fed, it's maybe it's not what you see, and it's sort of like the way they sell the weather in Putney, Vermont. I mean, here's the Leeds Chamber of Commerce thing, Paul. Putney, Vermont. Good morning, Bloomberg 92.9 FM Boston with that signal up to Putney. Putney, Vermont enjoys a mild climate. Are you ready? Putney School has cabins and huts. And if you're bad, you end up in them. Exactly. And in January, the average temperature is 9.5 degrees.
Sure, there you go.
Are you messing with me? I went to school there.
I know you went. Well, not in school. You're on the board. You're a distinguised member and all that. How cold?
It was all worth it.
How cold does it get in Putney, Vermont?
It gets cold walking across, these fields
that
out there.
That
in the
8 a.m.
morning.
class.
What you gotta love, what gives you some mettle as a man later on or a woman later on is. Barn duty, AM barn duty. You got to do it at 4:30 in the morning. You got to muck out the stalls. You learn about cows.
Great. This is great. Last Renatchathon with us with that.
So 5-to-1 cow to student ratio.
Oh, yeah.
Yeah,
it's incredibly important interview right now
after
what we saw of the Fed yesterday. I thank you for coming in. Get away from the 25-50 beat madness, which I made very clear. I think it's madness. Take us to Jeffrey Moore and cycle research after this turn by the Fed.
We like it. It makes sense. There's two cycles you're looking at in the U.S. economy, I think, as someone flying at 40, 50, 60,000 feet or the Fed, in theory. And that is, where's growth headed? It's slowing, but it is resilient. This was knowable in the summer that it was resilient. It was slowdown without a window of vulnerability where a hard landing is possible. At the same time, we've been talking about a separate cycle, which is a cycle in inflation. Look, it's come way down, okay? That is great. However, our forward-looking data kind of flattened out, stalled. It's not falling anymore. So if you're the Fed and you're figuring out all the many, many things that they're worried about, I would say get it while you can. Who knows? I can't predict the predictors. I don't want to guess where the future inflation gauge is going.
And Paul, Atlanta GDP now near 3%, and Goldman Sachs went to an operative 3% yesterday.
Yeah. So I mean, is that a soft landing for you, Lakshman?
So far, so good. Yeah,
right.
I think so. I would, in our forward look, I'm concerned about the inflation cycle. I've been talking to you. We've been having this conversation for a while. When we look abroad, the future inflation gauges have turned up more clearly. Here they flattened out and edging up a little bit. Nothing to panic about. Abroad, there are upturns. And so if you're, say, the ECB or even the BOE, you've got something that's problematic at this point. And even though they've got the same kind of slowing, maybe even a little more than us, they're a little bit more in a pickle than we are. And as a result, this kind of makes sense from a high cyclical vantage point.
How about the U.S. labor market here? I know that's one of the inputs that the Federal Reserve looks at pretty closely here. How do you view that?
Well, it's slowing. We know that. But we haven't seen the kind of outright firings that you would typically see in the vicinity of a hard landing. We know that the labor market data post-COVID, now I'm talking years, is a mess. It's very hard to read. I know there was a lot of focus on the SOM rule and this and that, and I just wouldn't try to squeeze that much specificity out of an unemployment rate or any of this data. And when I look at the vectors, the cycle in growth is slowing, but there's no window of vulnerability here.
In cycle research, with all the heritage back to the 30s and the 40s and quantitative and all that, how do you fold in the debt, the deficit, and fiscal dynamics? Is that part of your math?
Yeah, absolutely. The credit markets are an important driver of economic activity and to a degree inflation cycles. And we have talked about that. Where are the bond market vigilantes? When do they care about debt? I think it was it Vice President Cheney who said that deficits don't matter. and every once in a while they do. I saw, in the early Clinton term, the first term, deficits did matter, for example. So there are times when people or markets focus on it. Right now, doesn't seem to be one. I know we're looking at the longer yields, right? And they're kind of, what are they doing in the wake of all of this?
Oh, yes.
Maybe it's about resilient growth. Maybe that's what it's about.
How about the U.S. consumer here? How is the U.S. consumer doing out there? Because, again, as most people know, 70% of the U.S. economy comes from the consumer-driven aspects of it. How is the consumer doing?
Yeah, I think we still are stuck on the K-shaped economy. You've got the lower income under a lot of pressure, and the higher wealth families that have homes and stocks are feeling fine. Thank you. Look, stocks are at all-time highs, right?
Out on YouTube live chat, Chris had a smart question here. Sort of on liquidity. I know there's a little bit of reverse repo stuff, but just the M2 money sloshing in the system off of 3 stimuli. What do you people see in terms of the dynamics of the banking system over to the short-term paper system?
There's a lot of money sloshing around.
A ton of money.
There is no doubt about that. And we have seen, look, it's over a year ago, we had this cyclical kind of impulse down. A lot of discretionary things started to get hurt, but there was a lot of excess spending and there was a tight labor market, and it kept us out of a hard landing. And so here, some of that excess spending and liquidity, however you want to call it, is still sloshing around. They're trying to start to soak it up a little bit overseas, but you're in an election time. The only question is how much of a budget deficit, not if there's one, right?
I got 18 more questions. Do you have 12 or 18 questions?
Oh, yeah, I can go as long.
And the future inflation gauge is watching that, right? It's bringing that into our inflation outlook, and we're sticky here.
20 seconds, dollar weaker? Is that the price of all this?
I'm super oversimplifying it. The Fed can still cut, and overseas it's a little tougher to cut. And so, with that, keep it simple, stupid.
Yeah.
Sorry.
Why are you looking at me?
I don't want to make. I like the KISS principle. It's a KISS, okay? It's that ratio has us a little dollar weaker, I guess.
Left or John, thank you so much. ECRI, Economic Cycle Research Institute, with some optimism there in the American experiment. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. White House officials this morning continue to issue no comment on Israel's rumored role in electronic device explosions that have rocked Lebanon over the past several days, that have killed several dozen people and injured thousands of others. Secretary of State Antony Blinken insists that the U.S. was not told in advance of the details. ABC reports, though, Israelis did alert U.S. officials, including Defense Secretary Lloyd Austin, that they would be conducting an operation against Hezbollah, but was not told it would involve exploding pagers and walkie-talkies. At a White House briefing, National Security Communications Advisor John Kirby expressed concern that the attacks could jeopardize U.S.-led efforts to broker a ceasefire between Israel and Hamas.
We want to see the war end. And everything we've been doing since the beginning has been designed to prevent the conflict from escalating.
National Security Communications Advisor John Kirby. There are slightly different polls about Vice President Kamala Harris and former President Donald Trump in a key battleground state. According to a Washington Post poll, they are essentially tied, with Harris at 48% compared with Trump at 47%. Meanwhile, another survey conducted between September 11th through the 16th by the New York Times and Siena College shows Harris leading Trump 50% to 46% in the Keystone State. The House has rejected Speaker Mike Johnson's government funding bill. Bloomberg's Ed Baxter reports.
The bill would have linked temporary funding for the federal government with a mandate that states require proof of citizenship when people register to vote. This is a second try. It shows some fractures in the party over spending levels or dislike of continuing resolutions. Johnson says, back to the drawing board.
We ran the play. It was the best play. It was the right one. And so now we go back to the playbook. We'll draw up another play, and we'll come up with a solution. I'm already talking to colleagues about their many ideas. We have time to fix the situation, and we'll get right to it.
Yeah, deadline to prevent a partial government shutdown is October 1st. Ed Baxter, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, let's address how many people aren't in this market.
Yep.
And to me, it's ginormous. I get it. I see the total stock ownership, and it's record high in that, but I don't see the exuberance out there. Maybe it's Belchunas would say it's because of ETFs. I don't know.
Yeah, I don't know. It's there's so many platforms now for individual investors to easily get into the market. You can buy fractional shares. You can do all that type of stuff. And then, of course, you mentioned ETFs, Tom. Probably the most consumer-friendly, user-friendly instrument out there to get exposure to the markets. However you want to do that, it's really easy to do, really cost-efficient to do as well.
Futures up 94, up 1.7%. NASDAQ up 2.2%. Dow up now over 500 points in the last 90 minutes. We've got a bid to the market. What am I looking at for confirmation? I don't have it yet. The 10-year real yield floating here with a 1.58. I need to get under 1.52 to give me a real yield constructive signal. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen, and this is after the Fed voted to lower interest rates by 0.5 percentage point. Right now, NASDAQ futures up more than 2%, Dow futures up more than 1%, and we have S&P futures up more than 1.5%. We have the 2-year yield at 3.58%. That's down 3 basis points. The yield on the 10-year, 3.72%, and that's up 1 basis point. To currencies, the dollar stronger, Japanese yen weaker, euro, British pound stronger. What did I forget? Oh, yes, Bitcoin up more than 4%, about 63,000.
Doge, come on, Doge.
I gotta go. Coinbase Global up more than 4.5%. Marathon Digital Holdings at more than 6%. And speaking of the crypto space, former President Donald Trump made headlines. He bought burgers for bar-goers in New York City with Bitcoin. Yeah, he paid about $950 in Bitcoin for smash burgers, Diet Cokes for folks at Pub Key in the Greenwich Village. Now, as far as earnings, all eyes after the close. We get results from home builder Lennar and FedEx. FedEx sales actually seen holding steady despite weak demand. We'll see. Shares of FedEx right now up more than 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. Pompeo. That's a Bloomberg Business Flash. Tom and Paul.
All sorts of digital projects here. Let's take a moment, Lisa. This Bloomberg News Now thing is beyond cool. I'm not going to mince words for it. NPR figured this out. They've got a huge thing going on of keeping you up to date in the NPR world, and we're committed to do that within the Bloomberg world. Nathan Hager, Amy Morris, leading the project. There's a bunch of other people as well, and it's not only every hour a 4, 5, 6 minute update, something like that.
6 minutes. Everything global update.
Everything global. It's like immediate. It's an easy way to keep up with the zeitgeist. As simple as that. And we've been humbled by how it's exploded. Thank you, Nathan Hager and the team in Washington, really leading the way on that. Karen Moscow involved too. I don't know. Karen does a data check in it or something. I'm not sure. Futures up 95. Paul, Dow futures up 509.
How about
so
that?
Let's talk to a bond guy.
Sure.
This is great. What an equity response we see here. Joining us now, Jim Caron. He's at Morgan Stanley for an extended period. He'll join us across this half hour. So Jason Furman's out yesterday, and he's got his offspring, a teenager, emailing dad in the middle of the Fed meeting saying, "You were wrong. I was wrong. I didn't say what my opinion was because nobody cares. Full disclosure, I was looking for 25. I was wrong. You were wrong. Why were we wrong?"
I think we were thinking too logically about it. And by the way, Jason Furman's offspring's response was probably what my offspring would love to say to me as often as possible. So look, I mean, 50 basis points is absolutely a justifiable number. It was a close call. I think why we were wrong is that there was a component of Powell wanted to probably cut interest rates in July. And I think if you look at the dot plot and you look at the makeup of this decision, I think he kind of strong-armed the committee. And he said, look, we're going 50. We didn't do July. It was a mistake. And I need you guys to get behind me on this one. And I think that's why it was such a close call, and I think it was a judgment call. But I think there was a bit of strong arming that came through there. So that's hard. You know, that can break either way.
We had a dissenting vote there, and that's unusual. What does that tell you? What does that telegraph?
You know, it's been like 19 years since we've had a dissent on something like this. You know, during like a rate cut. Look, I mean, it tells me that, again, I'm going to go back to the dot plot. If you look at the dot plot for 2024, there's a lot of cohesiveness. Okay, we've got to cut interest rates. You know, we've got to get on the move here. When you start to go out to 2025 and out to 2026, there's a huge amount of dispersion of opinions across the whole thing. So I don't think this is just a done deal where the Fed, okay, that's it, we don't have to worry about it anymore. They're going to cut 250 basis points. The market's got that price. Let's all just sit back and relax, although that's what the markets are doing today. But you know, the question for me, and the thing that gets me the most on this whole number is the unemployment rate component, right? Everything is hinged upon a number that has been so terrible over the last couple of years, really since COVID. There's not a lot of certainty in the number, in the jobs reports. They're heavily revised, yet we're basing all of this monetary policy on a 4.4%,
right,
which is the Fed's unemployment rate target. I don't know. I mean, like, look, if the economy's really slowing, I would imagine that the unemployment rate goes up.
And, you know, I'm not going to give my opinion here, folks, but I am going to say what I'm going to observe around what Jim Caron just said is the 3-month moving average of non-farm payrolls. David Kelly over at JP Morgan, that's another bank. I don't know if you're familiar with him. David Kelly says, look, you're going to get a vector to a 3-month moving average that could be a negative statistic, and that would be the shock Jim's talking about. Okay, physics envy here, Bowden guy. I took from 0.25 out to 5.50. Bob Sinch taught me how to do this. You strap a Fibonacci to get a central tendency. 2 7/8 would be the roughly central, in the middle and neutral. We have 10, 25 measured rate cuts to get to normality as well. The reason he was bold and strong-armed him because he knows he's got massive room to move to quote-unquote normal.
Right. So, look, we can think of this, you know, the Fed's decision is almost like talk about physics, a three-dimensional problem, right? The first dimension is where is that neutral rate? Now, you just highlighted it, 2.875%. Let's call it 3%. Okay,
fine.
Let's just make that 3%. The second question is how quickly do you want to get there? And the third dimension of this whole thing is the unemployment component, right? If the unemployment rate rises fast, then they're going to move fast, right? So what my view is that if we are in an inflationary environment, and I still believe that we are in one, inflation stable for now, then that means that the Fed does not have a free shot at just cutting interest rates as aggressively without inflation picking up, and that could slow their rate of hikes.
Paul, can we do spherical geometry now?
Let's do it.
Okay, let's do it for George Struick of MIT years ago. But the bottom line is the elasticities of the X, Y, and Z axis there are different. I agree with you that the mother of all elasticities pre or post-election is the labor economy and the unemployment rate.
Right. Yeah. And so my suspicion here, again, this is a suspicion, is that one of the things that triggered the Fed to move as aggressively as they did is that they may think that the employment situation is worse than what the data is actually telling us, and that they do need to move quickly today. So this goes back to the thought that if they go 50, what are they telling the markets? Should we be nervous? I'm a little concerned here, and I want to be very clear about that. I want to admit that I think the unemployment rate is probably really higher than what is actually being forecasted in the data. And remember, this data gets revised all the time, and I think, as David Kelly was saying from that other bank, I think JP.
It's another bank. Where are they?
It's another
Park
bank.
Avenue.
You know, he may be correct about this, right? You know, you could get into a period of time.
Why do you think that data is maybe not as accurate?
So look, I mean, all of the statistics that have been coming through. Well, first of all, we had an 840,000 revision to payrolls, you know, lower than what we thought, right? So like the run rate is much lower. We got that last month. We have a significant amount of immigration, right? So we're still trying to calculate all of the people. Like the labor force grew. When the labor force grows, when the economy is really strong and the unemployment rate's 3.5%, that's great. When things start to slow down, a really large labor force can actually be a little bit of a dead weight drag on the economy, because what that means is that you have a lot of people looking for a job and less jobs available. That unemployment rate can go up quite a bit. So that reflexivity argument that Tom's making is actually extremely important. Like if the unemployment rate today was 5.2%, we'd be having a different discussion right now.
To go Merton or Taleb on you, the point here, folks, of all this blather, which only Jim Caron can do with his prodigious physics ability, is there's an assumed belief that we have a resilience, what in the physics world would be tensile strength, to withstand these shocks. Baloney. We don't. Nobody listening, except for old farts, understands that a 5% unemployment rate changes the dialogue.
Yeah, absolutely. I mean, look, I mean, you know, this is where the markets really start to lose steam, and I think this is what the Fed is worried about the most. So what they're communicating is that they will be very aggressive in order to defend that 4.4% unemployment rate level, and that's what we have to watch, because it may be difficult for them to defend.
All right, Jim, you're sticking around. You're not going anywhere.
Yeah, I still want to talk Jets-Patriots, by the way. It's the best game of the night. It's the best game of the whole season, by the way.
Wait. Alarian came in yesterday because he got tickets to the Jets. Is that why you're here today? You're going
I'm
as
a
well?
Patriots fan. So, no, I'm not going.
Side, take a note. We got to get Jim Caron and Mohamed Alarian together.
Yes.
Post-mortem, like a phone call.
Good round table.
We continue with Jim Caron, Morgan Stanley. The markets lift. Caron moving the Dow to 500 points. Bloomberg Surveillance. Stay with us.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're just moments away from another data point. Initial jobless claims for last week. Now ahead of it, futures still surging after the Fed's first rate cut in 4 years. We have NASDAQ futures up more than 2%, Dow futures up more than 1%, and we have S&P futures up more than 1% or 92 points. All right, the numbers coming in for initial jobless claims. The survey was for 230,000. That was the prior as well, coming in at 219,000. Revised, the prior was revised up to 231,000. All right, let's see the market reaction. Anything for NASDAQ futures? Still up 2%. We still got 1% for Dow futures. S&P futures still up more than 1.5%. To earnings we go. Shares of Darden restaurants, they're up more than 7%. Improving sales, but the big announcement, partnership with Uber for food delivery. It's starting with Olive Garden later this year. And then Cracker Barrel up 0.2%. Paul's favorite reported adjusted earnings per share for the fourth quarter, though that actually missed estimates, but those shares still rising a bit. Stocks on the move. Office furniture maker Steelcase down 8%. Third quarter revenue forecast fell short of estimates. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Claims 219 gets my attention. We'll have to see on that. All of our economic coverage, including Michael McKee's tour de force effort yesterday. Our economic indicators brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth. With advisor-centric support, future-ready technologies, grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. This is not the Dow. This is the S&P up 93 points. Dow up 505 points. Let me give you the percentages. SPX up 1.6%. Dow up 1.2%. NASDAQ 2.2%. Russell 2000, good morning, Lori Calvasina, up 2.6%. We are so honored, Jim Caron here, as we look at spherical geometry and where we're going to be. I just got an email from Boston. Enough of the Jets. Now, Sweeney won't talk about this because the future, Tom Brady's a UNC guy.
Exactly.
But, I mean, you got Jacoby and this guy from UNC. Is it a rebuilding year for the Patriots, or is it like, let's go?
No, I think it's a rebuilding year. Look, I mean, the Patriots have had some, has had a tough go of it. But this is why I'm excited about the Jets game, right? Because the Jets, it's always kind of random with the Jets, right? You just never know what you're going to get.
Yeah.
I know they're favored to win. They're favored to win by about 6. I think the total point score in the game is just under 40 points. So it's going to be a relatively low-scoring game. So it could be very interesting. Two very evenly matched teams.
Yeah, but we didn't want to talk to you about this. I want to know who's doing better, Brady or Belichick? Brady's doing better?
Yeah, I think so.
I mean, you've had a whole generation of Patriots fans that have only known winning and winning Super Bowls. What's the mindset for the folks?
Depends how old that Patriots fan is. Because I have like maybe 20 years of really, really bad memories.
Right.
So, yeah, very true.
Let us continue here with Jim Caron and Morgan Stanley on where we are. Yesterday, a lot of smart people were talking the Jim Caron dialogue. They're watching spreads. Tell mere mortals now how odd your bond market is and what spreads will do given the Powell soft landing.
So this is positive for risky assets and credit spreads, just broadly speaking. Powell is basically saying that he is going to stand behind and support this market. If we look at default rates have been coming down. Specifically, Tom, default rates have been coming down even in the CCC space. So even in the part of the credit market that people are worried about the most, so the lower credit echelons, CCCs, those spreads have actually started to come in as well. Now, if that starts to happen, then what you're going to see is a decline in the overall yield for high yield, and it makes it a very positive setup for these assets. And let's not just talk about high yield. We can also talk about private credit, private assets, all of these other things all are competing with each other for returns. So as these bond yields and these credit spreads start to come in, money is going to start to follow it. And I think this becomes positive, not just for bonds, but also for equities.
I mean, I'm looking at the INGO function on the Bloomberg terminal, Bloomberg index browser. Boy, the best return has been in that U.S. corporate high yield market, up 7.5% year to date. I mean, that is really strong, particularly given the brutal 2022 the fixed income market dealt with. A little bit of it thanks to November, December 23 came out okay, but this year looks pretty solid.
Yeah, so fortunately, I'm happy to say that we've been overweight high yield all year, so even counter to popular views at some points. So look, high yield has two things going for it. Number one, the majority of the high yield index is actually the higher quality, is actually double Bs, which means that high yield has a longer duration, so they have more interest rate sensitivity built into them. So as rates start to come down, high yield is also getting the benefit of the decline in interest rates in addition to the decline in default risks, particularly in the lower credit segments of that overall index, which are the triple Cs. So put those two things together, and high yield starts to look, very attractive, or it's looked very attractive. It's becoming, maybe a bit more pricey right now, but there's no reason to believe that you're not going to really get that coupon minus some of that default risk, and that's what the markets are betting on right now.
As a former investment banker, I pay attention to new issuance in the equity markets and in the bond market. Yeah. Boy, the bond market, issuers have been coming to market like crazy. Do you guys pick up the phone when they call you?
Look, absolutely. And talk about issuance and technicals and supply. One of the things that's been interesting about high yield is that the technicals are so positive that the net supply of high yield is negative.
Oh, okay.
Meaning that, so there's been gross issuance in the high yield market, but on net, there's been more things maturing and, versus what's been being issued. So on net, the supply is actually negative. So not only do you have some positive fundamentals, support from Powell, but you also have supply technicals that have been very strong. And like you said, you're putting up some pretty good numbers this year.
Wow. So, all right, what do we do here? I guess, think about total risk here. Where do I go? Where is it better? Equities, fixed income, alternative investments? Where do you guys see the best opportunities? And I guess what is a solidly declining interest rate environment?
So let me say that we're also overweight equities at this point. We have more of a risk-on tilt towards equities. Okay. The thing that we have to recognize here is that if you look at 2025 full-year earnings for equities, it's around $280. Now, the view there is that you would get a PE multiple decline. It would come into like 19 and a half, and that would suggest that maybe earnings come down as well, and you get a lower equity price. But what's starting to happen right now is that $280 earnings number for 2025 is becoming more believable. People are assigning a 20 or even a 21 PE multiple to that. So you're getting numbers that are getting up towards that 5,800, 5,900, and I know that's obviously what's going on today. All of that is getting pulled forward. That's my concern with equities right now, is that we're pulling forward all of that 2025 potential good news, and it's happening right now. So now, as we go forward, it's going to be about show me the data, show me the numbers as we move through the fourth quarter, as we move through the first quarter, and we're priced, I don't want to say to perfection, but pretty close to it.
But if we pulled forward bonds, price up, yield down, spreads at, odd levels to say it's the same thing in bonds. I'm sorry.
So you're absolutely right, and that's why we're underweight fixed income. We're underweight duration here, even though the Fed's cutting, and we expect because the markets have already priced this in. Right, we're already looking at a 10-year note that's around 3.75%, a 2-year that is about 3.6%. If the yield curve steepens, how much further can these bond yields go down? Even if the Fed goes to 3%, how much further can these bond yields go down?
Can we link our Ute? Let's do this now with James Caron. I went up to Orono, where they have a black bear, to see a total eclipse of the sun. It was a racket my father was in. And we had to stop at Bowdoin and stare at a 132-year-old observatory that was like the original thing. A student died in a rock climbing accident, and his father put up the money to rebuild that puppy at Bowdoin. Did you go into that observatory as a kid in physics?
Absolutely, it was a rite of passage. You had to go
Enjoy
there. Yes, no, it's such a historic thing. Absolutely, there's no question, and that eclipse was pretty interesting this time around.
Yeah, it was great. But the Bowdoin, explain to our audience what's it like to be a bratty 19-year-old in physics, and you got to sit there and put your eye up and say, oh, that's the moons of Jupiter. It gets you right back to the 1600s.
It's humbling. There's no question it's a humbling experience when you're surrounded by so many smart people and you realize that, as much as you want to, think of yourself, you realize that there's a bigger universe around you, and it gives you a lot of perspective. And I think that's the one thing that I really learned and took away from that.
We got to do UNL Arian at some point here. Patriots and Jets. Jim Caron, thank you so much with Morgan Stanley. Really informative there as he looks from the bond space over to equities with futures up 90 Dow futures up 474 points. As Paul mentioned, the VIX in big, not 2 points, but coming in. Be interesting to see where that settles. The VIX rather in a bull market 16.65. Oil with an elevation. Lisa's mentioned too many times today. Bitcoin with an elevation. It's almost going to print 63,000. We have the quote of the Doge on the Bloomberg terminal. I think we do. I'll have to look that. We'll have to look that up as we can. Futures up 90. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Lebanon's death toll from a series of walkie-talkie and pager explosions this week rose to 37, according to local authorities. It's suspected Israel is behind the attacks against Hezbollah militants. The Lebanese Health Ministry says a second wave of blasts on Wednesday killed 25 and injured more than 600. Some occurred at funerals for Hezbollah members who died Tuesday when thousands of pagers, most of them carried by the Iran-backed group, exploded in supermarkets, streets, and homes across the country. Thousands were wounded. Kamala Harris may be opening more of a lead against Donald Trump in the key swing state of Pennsylvania after last week's debate. Bloomberg's David Gura has more on the latest New York Times Siena College poll conducted with the Philadelphia Inquirer.
50% say that they would vote for Vice President Harris. 46% say that they would vote for Donald Trump. Of course, well within the margin of error. So she has a lead there, but again, showcases how narrow this election is. And I should say that the respondents to that poll answered those questions before this second assassination attempt of Donald Trump. Just want to put that out there as a modifier.
David Gura hosts the Bloomberg Big Take podcast. Meanwhile, according to a Washington Post poll, they are essentially tied with Harris at 48 compared to Trump at 47%. Police in Kentucky say they believe a body found in the vicinity of Interstate 75 near London, Kentucky, is that of Joseph Couch, who was suspected of shooting and wounding 5 people on the highway. The discovery came following a lengthy search of rugged terrain near the area where the shootings took place on September 7th. Laurel County Sheriff John Root.
We've had school cancellations. We've had church cancellations. People's been in fear. That's not the normal here in Laurel County. So now that this has been discovered, I hope that our county can get back to what's normal.
Sheriff Root and the Kentucky State Police Commissioner said Couch's cause of death will be determined after an autopsy today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Bloomberg Surveillance. We're brought to you by IBKR. With the Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Out on YouTube live chat, love the observations today. I remember watching the Patriots lose to the Bears 46-10 in the Super Bowl. I grew up on the Patriots being mostly terrible. 39 years ago. I feel ancient. I have the clearest memory. The game was over about 7 minutes into the first quarter.
The fridge, right?
Oh, boo, blank, and who. At least they've been to the Super Bowl. The Lions, we've never been. We almost made it. But the 49ers had something else to say. But you're right. I remember that game, and it was like, ooh.
Head coach Mike Ditka, that may have had a little bit to do with it.
Yeah.
You know, we'll see. They play November 10th, which will be exciting. But, you know, to all of you worldwide, in New York, it's sort of a little fever. I mean, am I right? This is the first time that Mr. Rogers dons the Jets uniform?
No, well,
at home?
At home.
Well, since the 4 plays from last season.
Since that. I mean, he got his first victory last weekend as a Jet.
It's fun. I mean, you know, it's
well, actually, the Jets won the game last year that he started it.
Well, yeah, okay. Let's get all technical.
He played Buffalo, I guess.
Let's listen to too much sports.
I'm taking off tomorrow. I'm watching every minute.
Oh,
I'm going to
okay,
be up till midnight.
Very good.
Oh, I'm proud of you.
Proud of you. It's my first vacation day of the year. Sweeney took them all.
Yeah, oh yeah.
From New York, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still advancing after the Fed chose a little bit more aggressive reduction than investors had been expecting just a week ago. Meanwhile, the BOE maintained its key interest rate at 5%. We also had more economic data. Applications for unemployment benefits fell to the lowest level since May last week. We have NASDAQ futures up more than 2%, Dow futures up more than 1%, S&P futures up more than 1.5%. We had the 2-year yield 3.62%. That's little change. The yield on the 10-year 3.75%, and that's up 4 basis points. A few companies making news. It's TD Bank. It announced its CEO Bharat Masrani plans to retire in April. He'll be replaced by the bank's group head of Canadian personal banking, Raymond Chun. Shares in Canada down about 0.2%. And sources say Ampere Computing, that's the semiconductor startup that's backed by Oracle. It's exploring a potential sale. We'll check in with Oracle. Their shares up more than 1%. And finally, shares of Topgolf Callaway up more than 1%. Saudi Arabia has teamed up with the company. They're going to launch new golf facilities in the kingdom. Golf Saudi, plans to build 3 Topgolf venues by 2028. That is your Bloomberg Business Flash. Tom and Paul.
You're out on the course. Do you use Callaway clubs?
Yeah, they're my irons. I got the Callaway irons, tailor-made drivers.
You can feel a difference.
They're great. I like them. I've used them for 25 years.
I got this group in Louisville, Kentucky. They're making the wooden clubs.
Oh, yeah?
I just love them.
They're
the
coming
sound.
back. Okay.
You know, I can't get under a 120, but just the sound of them is extraordinary.
Yep, there you go.
It's just great. Futures up 90. We had Jim Caron in Bond Guy.
Yep.
He talked about equities, so let's get Equity Guy in to talk about bonds.
Sure.
I think it works out. Julian Emanuel joins us right now. Can you send thanks to Ed Hyman, and tell him thank you for appearing generously 10, 11, 12 days ago and then coming in with your redo call? He cast aspersion on you. What did you say to Ed Hyman to get him to switch a view from recession difficulty into the soft landing we're celebrating this morning?
Well, I think if you go back and think about it, Tom, what it does is, our business, first of all, forecasting things is difficult, whether you're an economist or a strategist.
Absolutely.
But it's part of the process. Again, Keynes is famous for the statement, when the facts change, I change. What do you do, sir? We went through that same thing ourselves at mid-year in terms of taking our price target up to 6,000. Essentially recognizing that this environment is totally different than anything any of us have ever seen.
And with immense respect to C.J. Lawrence and what Ed Hyman invented years ago, is the distinction pandemic fiscal stimuli, or is it a new productivity we don't understand?
Well, and the kicker is that it could well be the new productivity we don't understand. And clearly, you wouldn't have seen the announcement of this massive deal for building AI, power plant type build out that we've seen in the last couple of days if there were not the belief, and we share that belief, that AI is absolutely going to underpin productivity in the long run here.
What did you make yesterday of our Federal Reserve and kind of what their messaging was? What did you take away from that?
Well, it really was an example of, again, getting the dual mandate back squarely in focus, but also reinforcing the message we're cutting because we can, not because we have to, and this whole idea that they know something that we don't with regard to economic weakness. Completely discredit that, but yet at the same time, it's also an implicit message that if the data does weaken, and particularly if we have the kind of election volatility that we had, say, in the hanging Chad year of 2000, where stocks were similarly expensive, the economy was starting to slow, and then all of a sudden you couldn't figure out who the president was, and that soured the mood and soured asset markets. The Fed is prepared to act. The Fed did not act in 2000, and that's part of why you got a recession in early 01.
So given what we've heard from the Fed yesterday, given what we know about, I guess, earnings, is it full speed ahead on risk assets? And if so, where do you see the opportunities?
So we do continue to be very positive into year end, and so far 25 looks good to us as well. Part of this narrative again is the Fed's behind us. We have earnings that will once again, when the reports start in a couple of weeks, confirm the fact that second quarter was not an anomaly, that yes, the other 493 stocks in the S&P 500 are growing their earnings. And that combination, along with the statistic that we quote and we really like, 6 out of 6 presidential election years where you were up double digits on Labor Day, every single one of them finished higher by year end.
What does the eye do to go to, Ed was in, and of course I start with trucking statistics because that's what he's doing. But what is the dynamics of corporate and business investment given the madness of the last 24 hours? Well, it's got to be plus.
It is. And again, we've been doing this a while, and we try to it's Curb Your Enthusiasm, the legendary comedy show, because part of what you don't ever really want to do emotionally, and the last 24 hours is a perfect example of this, because the initial reaction was disappointment to way the market traded, and then all of a sudden this morning we've reassessed, and it's full steam ahead. We want to be tempered, but the fact is that we are in one of those unique situations where, because the economy looks like it's going to soft land, Ed having changed his forecast, you are in one of these win-win scenarios where companies are likely going to be more incentivized to increase CapEx, to take on M&A, regardless of the fact that valuations
need Paul
are
to
high.
take on new technology. I think that's understated.
How about old technology? I mean, here in the 2-year Treasury, we've gone from 5% yield down to 3.60. During that period of time, stuff like utilities and REITs have done well. Do they have more to go, or should I take some profits there?
So from our point of view, we've trusted in what we call the Fed rate cut playbook. And basically what it says is that a lot of the move on the long end of yields is done. Frankly, you've come in 100 basis points on the 10-year yield. If you're not having a recession, and we don't think you're having a recession, and the best of inflation is just recently passed, not to say that inflation won't continue lower, that to us means the yield story is likely higher, and that's where you want to sort of trim your holdings on places like REITs and utilities.
Single point SPX 12 months out.
Well,
come on.
I can't do that until we put out the year ahead, but frankly, we do think, particularly if you think about past valuation paradigms, we're expensive at 24 times, but we're nowhere near the 28 to 30 times we've seen in prior peaks, and the Fed is with us, and productivity is with us.
Julian Emanuel, thank you so much for that. I'm in Evercore ISI this morning. I think, Paul, we really need to frame the equity markets. SPX up 88 points, 1.6%. We were up 500 on the Dow. We pulled back. We're up only 462 points
Exactly.
now.
It's been a solid move. The market, I guess, was a little bit in digestion mode yesterday afternoon, trying to figure out what the message the Fed was sending. But boy, they've taken a bullish stance here in the futures market, Tom.
We will see. There are good announcements of the fall. The leaves change across Central Park and all. And something happens. Saturday Night Live puts out their schedule for the fall.
Oh, I saw that.
Hugely anticipated.
Yep.
October 12th, a duo, Ariana Grande will be holding court, and one S. Nicks will show up.
No kidding.
Not getting enough acclaim this year. Stevie Nicks has been out, touring like she was 28 years old or 32. Stevie holding court at 49. Stevie Nicks will be there October 12th, and she has a guitar player, and he's totally iconic, Waddy Wachtel of Queens, Jackson Heights, I should say, New York. And there's a song, it's like Waddy owns it. Stevie Nicks, October 12th, SNL, hopefully with Waddy Wachtel.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, all here getting ready for Jets Patriots. Good morning across the nation. On YouTube, subscribe to Bloomberg Podcast, building out each and every day for us on Android Auto on your commute, Apple CarPlay on your commute. On the corridor, good morning, 99.1 FM in Washington. 92.9 FM Boston. Good morning to you. Somebody said you go north-south, Katahdin down to Block Island.
All right.
What about east-west? We go from Provincetown over to the shores of the Connecticut River.
All right, very
That's
good.
the east-west.
That's a big stick.
But yeah, it's a big stick out there in Boston. Good morning. Good morning, Bloomberg. 11.3. Okay, we just didn't blow up the show. We're going to get to this. I'm going to get to Lisa in a moment. Paul, I didn't know this. Sweeney has in his contract that any time Chapel Hill's mentioned, we have to have a Duke guest.
Yes, we have to counterbalance
so
that.
We're counterbalancing it right now. We're going to get to Joe Davis of Duke University here in a moment. The markets up 86, not Dow points, 86 SPX. And Paul, you had the observation, never have I seen a pause off a Fed meeting like this morning.
Yeah, the Fed, we had a couple hours yesterday, didn't know really what to do. The stocks traded kind of sideways yesterday, but I think people are taking a look at this and saying, all right, all systems go here. So we've got a market, S&P futures up 1.5%, Tom.
From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we got futures still on the rise after the Fed's outsides cutted, but it's also after new data showed the job market remains healthy despite a slowdown in hiring. You had initial jobless claims decrease by 12,000 to 219,000 last week. We got NASDAQ futures up more than 2%, 413 points. Dow futures up more than 1%, 440 points. And S&P futures up more than 1.5%, 86 points. We have the two-year yield at 3.64%. That's up 1 basis point. The yield on the 10-year 3.76%. And that's up 5 basis points. To commodities, we have spot gold higher, $2,575 an ounce. Brent crude, $74 a barrel. We have WTI crude at $71 a barrel. Companies making news, that's Apple. Its shares up more than 1.5%. It's been warned by the European Union to open up its iPhone operating system to rival technologies, or it could risk big fine under that Digital Markets Act, so that's a big thing. Boeing, they're requiring a lot of its salary workers to take unpaid leave to preserve that cash because you have a lot of their factory workers in Seattle and Oregon still on strike. Their shares up 0.8%. And then the flip side, Amazon boosting the pay of its hourly warehouse workers by at least $1.50 an hour.
Yeah.
They also get Prime memberships in those benefits. Shares up nearly 2%. That's a Bloomberg Business Flash. Tom and Paul.
I think that's the news item of the day with Amazon, with that lift there for the people moving the boxes around. Alexander with a smart comment out on YouTube. The live chat on YouTube is the best way to get in touch with Lisa. Excuse me, Lisa Mateo. Alexander, I'm gasping here. Exhaustion. I didn't sleep last night.
Why not?
Didn't all night.
You're going to have a big night tonight with the Jets. So.
Yeah, I'm taking off tomorrow.
Oh, you are? Good.
Yeah.
Good.
I mean, I told Muhammad I'd watch every minute.
Yep. All right.
I try to get, he's with a Michael's box, Michael's restaurant. And, and he's in the box. I'm just trying to talk my way into a seat. I struck out. Okay. I'm not going to go. Alexander, Bank of England didn't cut. That's a soft hike. Praise Hawks. That's a brilliant statement. And this is the interdependencies that we see out there. Right now, really good at the interdependencies is Joe Davis with one of the most interesting jobs in the nation, global chief economist for Vanguard, which is an index shop. Why do they need Joe Davis at Vanguard? Justify your existence.
And again, I've been a
You
Vanguard
walked
20
in
years.
and John interviewed you. Mr. Bogle interviewed you?
Oh, yes, he did.
How'd you sell
Yeah.
yourself to the guy who's running index funds?
It's funny, the first question he asked me, my first day on the job, he goes, Joe, you need to help me help investors have a cogent framework for where will long-term earnings growth be, dividends, and what drives interest rates. right? And so and Tom, as you well know, we are very large active fixed income managers, so our cyclical assessment of risks of the economy matter a lot. But I think it's really that long term. How do I think about debt? How do I think about AI? What, if any, would that mean for corporate earnings and the portfolios we have to assemble for clients? So that's why I've been there for 20 years. And economists sometimes don't always last that long, but that's really been the big reason. And our group has grown. I mean, we have a 75-person research organization in Vanguard. Yes.
Okay. What did you learn yesterday from your Federal Reserve Chairman?
Well, I think we learned two things. One is I think they were all in terms of the soft landing view. Okay. I really view this as insurance. They are underwriting risk taking. I mean, that's what the market is looking at. I mean, I think it was somewhat appropriate. I mean, this is a Federal Reserve that we can debate where the neutral rate all day until we come home. But the fact is they are restrictive, and the labor market is cool. We saw this in our leading indicators. We have one of the largest 401k systems, and so we see hiring rates in real time. And we saw a deceleration in the summer. That has stabilized, and so I think what we're going to see is, a little bit more normalization. But I don't think this is a emergency reaction for the Fed.
What's that mean for the fixed income market from your perspective?
Well, I think again you're gonna have pressure at the short end to continue to rally. Okay. I think what much more importantly is for the long end. Again, unless we're headed for a recession, I don't see material moves from here. I mean, again, I think you still have this dichotomy between what the equity market is saying, and you still have a flat yield curve. Yes, it's steepening a little bit, but that dichotomy has been in play for 2 years now.
All right. Well, it looks like the Fed has now maybe shifted its focus a little bit away from inflation, maybe more towards the labor market. What's your view of the labor market today?
It is softened, but it's not weak. Okay. Anything outside of labor, and I'd say manufacturing, GDP growth is 3% year over year, which doesn't get as much attention as one would think. We're still going to see, I think, some modest weakness in terms of the labor market, but I think, again, part of this is a normalization from just profound tightness that we're out of that now. And
you're not doing the parlor game at Wall Street. Anna Wong joining us here in a moment with this historic call, really getting national acclaim. Dr. Wong will join us here after Dr. Davis. So what are we at the hospital? Joe Davis, you're known for doing sidecar research projects, and of course, you're looking at AI. Yes. What is your observation of the madness forward?
Well, I tell you, there's two things that was eye-opening for me, Tom, is that when you look at all the key forces that'll matter for the next decade, regardless of what the Federal Reserve does, demographics, aging of society, AI, and debt, I can tell you one thing, and that is the consensus view that the Federal Reserve and others have of 2% growth for the next decade is almost a mathematical impossibility. And so what is coming is a tug of war between our high debt levels, particularly the structural deficit. It's not that debt is high, it's that the fact we're chronically running structural deficits. And at the other side, how transformative could AI be to offset just some of the demographic drag that we're going to have for the next decade? That is a horse race, which is why you cannot generate the consensus view and even the Fed's long-term dots.
So talk to us about the national debt, the deficits. I mean, that's been a story. I've been on Wall Street since 1986. It's been a story since then.
Yes.
Sorry, maybe before then. When is it just a political story? There's no political will to deal with it. Therefore, just take comfort in the fact that rates are low. People are always lending us money. We're still growing the economy.
Sure. Again, so we're going to have a book out next year. We're looking at all these things. What is? And I got to be careful with what I'm going to say. There is no correlation between debt levels and future economic growth. Now, that does not matter that debt levels do not matter. So I try not to say that south of New York City in political circles. Yep. But what it does matter, structural deficits do matter. So when you chronically have a gap between revenues and expenditures, they can be modestly inflationary, and we have not seen that historically, and that's going to be really the biggest growth headwind the United States is going to face. It's not all in the term structure, but in 5 or 10 years it could be, and so that's where the productivity boom is going to be the one relief valve, like we saw in the late 90s. But again, that's maybe not assured.
Let's go back to your Duke economics, and I'm going to go to Joe Stiglitz, who was great on this. People won't believe it because they think it's more modern to politically tinged Stiglitz, but it's got to be about the growth rate, the small g within our mathematics. And the American conceit is our small g is superior enough to withstand our debt and deficit. Do you see that continuing?
Again, it's possible, Tom. We are showing that the irony in today's economy, the biggest reason why growth is low in the United States, it's been 2% plus or minus for how long? For 20 years? It's because actually we do not have enough automation in a service-based economy. That's why we have to continue to throw people in a tight labor market, yet we're stuck with 2% growth. And so in one sense, we're going to need more automation, despite some concerns. AI is going to be dystopian and rob jobs. The question will be how much in the balance. But AI better be transformative to overcome the demographic drag. We are projecting that in the next 10 years, we're going to have the largest change in the labor market that we've seen in 70 years. And part of that is going to be welcome. The question is, can growth be strong enough to offset the structural deficits that we're continuing to run?
Fascinating. Don't be a stranger. Joe Davies, can you do something about the train from Philadelphia to New York? Bill Schunas uses it as like an endless excuse.
It was late right out of the chute.
Why can't we have a Swiss train from Philadelphia to New York and back?
Maybe they sell a train. It's all right.
Yeah, what is it, the tunnel?
I don't know. It's always a tunnel.
It's always a tunnel.
Yep.
Exactly. Joe Davis, Vanguard, thank you. Futures up 92. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Kamala Harris and Donald Trump are set to make appearances that are meant to fire up core supporters. Harris is participating in a live stream tonight with Oprah Winfrey in Michigan. Trump is scheduled to attend an evening event in Washington with prominent Jewish donors before addressing a gathering of the Israeli-American Council. Last night, the former president spoke to supporters at a campaign rally in Uniondale, New York. Trump continued to push the debunked claim about the Haitian immigrant community in Springfield, Ohio, that they eat pets.
I'm going to go there in the next 2 weeks. I'm going to Springfield and I'm going to Aurora. You may never see me again, but that's okay. Got to do what I got to do. Whatever happened to Trump? Well, he never got out of Springfield.
Meanwhile, second gentleman Doug Emhoff campaigned for his wife last night in New York. The husband of Kamala Harris responded to remarks from former Trump press secretary, now Arkansas Governor Sarah Huckabee Sanders, who said that the vice president does not have anything to keep her humble because she does not have any biological children.
There is nothing more important to me, Kamala, and Kirsten than our kids. Our big, beautiful, blended family.
Earlier, Harris called on reforms to fix America's broken immigration system, urging there is a way to create a pathway to citizenship while keeping a secure border. House Speaker Mike Johnson is looking for a plan B after his proposal to avoid a looming federal government shutdown at the end of the month was voted down. The bill would have funded the government for 6 months, but also included an election security measure that was a non-starter for Democrats. Israel's defense minister declared what he called a new phase in the war. It comes after 2 waves of exploding electronic devices in Lebanon, killing at least 32 people. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, the grind of economics and market economics is just a grind. Starting with the airplane travel is enough to kill you.
Yep.
And so to have a year where all of a sudden everybody stops and listens, like I'll say Neil Dutta, Renmac, what we saw from any number of others here. And this year it's Anna Wong.
Yep.
It's just the world has stopped to listen to the Chicago PhD talk about our odd labor economy.
Yep, Anna Wong, Chief US Economist with Bloomberg Economics. She's coming in here in just a moment, Tom.
We're going to have to see, folks. This is really well timed. I need you to stay with us here across all of our platforms, on radio across this nation, on YouTube worldwide. Anna Wong with us next. Our conversation of the day. The Dow up 502 futures points.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen after the Fed voted to lower interest rates by a 0.5 percentage point. Meanwhile, the BOE maintained its key interest rate at 5%. So we have NASDAQ futures up more than 2%, Dow futures up more than 1%, S&P futures up more than 1.5%. The 2-year yield at 3.62%. That's little change. The yield on the 10-year 3.75%, and that's up about 4 basis points. To currencies, we have the dollar weaker, dollar stronger, Japanese yen weaker. We have euro and British pound both stronger. And yes, we have to point out Bitcoin up more than 4.5% right now at about 63,000. The Doge up 0.2%.
Thank you.
You're welcome.
Thank you.
Coinbase Global up more than 5%. You have Marathon Digital Holdings, CleanSpark up more than 6%. Companies making news, JetBlue up more than 3%. Get this, it plans to open its first ever airport lounges. They'll open at JFK late 2025, Boston Logan International Airport after that. Stay tuned, JetBlue CEO will be on TV and radio at 12:15 p.m. Wall Street time today. Amazon launching an artificially intelligent assistant designed to help online merchants manage their business. We have Amazon shares up 2%. And since we're talking about AI, the technology actually helping dead celebrities work again. This is a Business Week article. You have to check it out. They're making millions for their estate, from voiceover work to digital human acting jobs. Folks like Judy Garland, I kid you not. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash.
Lisa Mateo, thank you so much.
Greatly your news.
I appreciate that. If you look at somebody's resume on LinkedIn, you can say, well, this was easy. You drop by the Treasury and you do some John Taylor kind of John Snow International stuff, and then you go to the White House, and the worst coffee in the world. They serve coffee in styrofoam cups at the White House. Everybody goes out to Charbucks. Then you go over to the Federal Reserve and the Eccles building, and you polish the table for the governors and the presidents. And then if you get lucky, you become chief U.S. economist for Bloomberg. And it starts somewhere. For Anna Wong, it started with one of my favorite people. He defined the study of gold with golden feathers a number of decades ago, Barry Eichengreen at Berkeley. What was it like in a lecture hall? How intimidating was it with Eichengreen?
It was actually a small seminar. And
so even worse.
He's not intimidating at all. He's just a sweet historian who's very into details and very meticulous in his empirical work.
In the empirical work, bring that forward to where you are, without question the most influential call in American economics this year. Forget about R. Starden Williams, that's old news. Birth debt and our misguess on the labor economy. How off the mark are we right now?
I think my estimate is that every month the non-farm payroll is overstating by an average of 91,000 per month. So if the 3-month average, moving average from June, July, and August is 116,000.
I mentioned that yesterday.
Yeah.
Go.
So basically, the true underlying pace is probably closer to 20,000.
Does that migrate to a negative statistic, as David Kelly at J.P. Morgan talks about?
Well, I think that would be very close to saw speed. So if the Fed's estimate of a break-even pace of job growth required to stabilize unemployment rate is about 200,000, and the economy is only producing 20,000 per month, then that would
Paul,
be...
that's jargon. Stall speed is what the Boston Red Sox are doing right now. Continue.
Why are they overcounting again? What's the miscalculation?
Right. So in an economic downturn, there's just a lot of firms going, bankrupt, filing Chapter 11, and we have seen as of mid-year a 31% rise in Chapter 11 filings. And at the same time, business formation is slowing. So as a result, the BLS estimate the job growth from net birth and death firms, right? Because they tend to get these data only a year later with the QCEW. Powell mentioned QCEW yesterday. I predict that the QCEW will be the next CPI supercore. Like now that Powell has mentioned that he's going to mentally adjust the non-farm payrolls according to QCEW, everybody will be paying attention to the next QCEW update, which would be for the second quarter. We estimate that the second quarter actually did see a sharp rise in bankruptcies and slowdown in job formation. That was the quarter when non-farm payroll in April was probably negative once you adjust for the adjustments.
Well, is the Fed now behind dealing with the labor market, do you think? And that may be one of the reasons why they went 50 basis points and not 25?
So Powell did not acknowledge that, but I think they are now back on the curve. They used to be behind, now they're back.
When you look at let's bring this back to English, okay? Let's move away from you mentioned imperial word, Professor Eichengreen. Let's move it to English. Model what you just said over to the tip point mentally in the country of 4.x, 5.x unemployment rate. When do we emotionally get into stall speed on the unemployment rate?
That is the hardest question I've ever heard. Emotional stall speed.
Austin Goolsbee at Booth would have done that, Come on. I mean, when does the unemployment rate become politically painful in this nation? Anna Wong, is it 4.8%, 5.1%? Do I got to wait for a 6?
No, 4.8 is there already. In fact, now is already there. You talk to anyone on the street, they will tell you, not Wall Street, Main Street, they will tell you that it's hard to find a full-time job. They can only find part-time jobs, and they have to find a lot of part-time jobs in order to pay the bill. And in fact, this will show up in the household survey data if you drill into the details. So micro data shows that, in fact, the reason why prime age employment is at peak was because a lot of native workers are working part-time, not full-time, as in a typical healthy labor market cycle.
What is the immigration policies or experience over the past 2 or 3 years with a lot of the migration coming in on the southern border? How does that affect, again, what's the analysis showing you? How's that affecting the labor market?
Yeah, so our estimate is that the unemployment rate of the new immigrants who came in since 2022 is about 11% right now. So I think it takes time to integrate them in the labor market, and during this transition period is when they could push up the unemployment rate. So it really depends on whether the labor market is healthy enough to quickly absorb them.
Okay, I got time for one more question because you didn't answer my last question. You went around it like a pro. The answer is, when does the unemployment rate become stressful for all, including the central bank? Are we near that, or does Anna Wong frame that out to June of next year, or even out farther? How close are we to labor stress?
So if you think that 4.8% is when people are obviously alarmed about the possibility of recession, then I think in the November payrolls, it's possible that you could see the unemployment rate rising to 4.5%.
To be clear, November, first week of November or first week of December?
November 1st.
Okay.
So that would be the October payrolls. Yeah. It's possible that judging by the unemployment flows, that could show 4.5%.
I rarely do this, Paul. I'm going to editorialize it. Powell sat these people down at the Fed, and he said, we got to get out front of the October payrolls, first week in November, right around the election, I might point out.
All right, Anna, just real quick, 30 seconds. What's the greatest risk here to this economy right today? Is it the labor market?
It is both labor market and the election.
We didn't even go there. Thankfully.
Next time I drag Eichengreen in here, you got to show up.
I will definitely. He's my thesis advisor.
We got to get you both in here. He's been huge support for decades for me, and his paper Jackson Hole last year on debt and deficit was outstanding. It was really got some splash. Anna Wong, it's August. I can't call you the Economist of the Year yet. It's too early. It's like the Oscars. I got to wait. But you're killing it, Anna Wong. For Bloomberg Economics, and with a team around her internationally extraordinary. We're doing great work How do you get a job at Bloomberg and work out of Barcelona? What is that about?
I don't know. Let me know if you figure it out.
Madrid. I mean, it's unreal. Anna Wong there on your labor economy into the end of the year. Off of the 50-beat cut, we got a celebration. SPX futures up 96 points. Dow futures up 509. Across the nation, your commute on YouTube. Subscribe to Bloomberg Podcast. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. So how are the markets going to kick things off on a Thursday? This is the day after the Fed lowered interest rates by a 0.5 percentage point. We also had more economic data for traders to consider. Applications for U.S. unemployment benefits fell to the lowest level since May of last week. Let's get right to it with the S&P 500 up more than 1.5%, 92 points at 5,711. The Dow up more than 1%, 454 points at 42,035. 224. And we have the NASDAQ down, up about more than 2% at 407.17,977. We have the 2-year yield 3.61%. That's little change. The yield on the 10-year 3.75%, and that's up 4 basis points. To commodities, spot gold higher, $2,577 an ounce. We have Brent crude $74 a barrel, WTI crude $71 a barrel. We have the dollar stronger, Japanese yen weaker, euro British pound stronger, Bitcoin up nearly 5% at about 63,000. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. The first print here off Lisa's great data check is up 595 on the Dow. What a perfect moment to speak to Mr. Eisman. With Neuberger Berman, acclaimed in a movie of a few years ago, look for the new Eisman Hollywood property. I think it's a Memorial Day, Paul. You know, Memorial Day's a good opening.
Sure,
you know,
that's what I hear.
It's very good. Look for Bear Squeeze. You're going to see that Memorial Day 2025. Steve, is this just one big short cover? We got the wall of money out there. Lawrence McDonald has been brilliant on this. With the action yesterday, is it an indirect short cover going on?
That's too sophisticated for me. I mean, I find the whole incredible amount of energy that people spend on the Fed day more amusing than informative. You know, think about it for a second. How much ink was spilled about whether the Fed would lower 25 or 50? All right, so they lowered 50, and then what happened? The market had no reaction. Just went up and down. Nobody knew what to do. And today the market's up huge, but rates are higher. So, you know, you put it all together. I try not to spend too much time trying to figure it out. All I care about is the general direction of the Fed is lower. How much lower, I don't particularly care. I don't think that's particularly important. The more important question is, how's the economy? The economy has slowed, but the data seems to indicate that the economy is fine, and that's all that really matters.
So what, other than the economy, or I guess in the context of the economy, what are the drivers for kind of whether you're bullish or bearish? What are some of the big variables that you focus on?
I've gotten thematic, more thematic in the last bunch of years, and I think that there are two great equity themes of our time, and we try and focus our portfolios as much as reasonable on those themes, and those are AI/tech and infrastructure. And I think those themes will last for years. There'll be variations. You know, on the infrastructure side, politics do matter, but the overall theme will continue.
Paul, let me interrupt with a data check here as the market surged. Dow up 566 points. On a percentage basis, the market lifts here at 933, greater than futures. NASDAQ up 2.3%. As Paul predicted, the VIX comes in 16.40.
On the AI trade, Steve, how do you suggest people play it? I think the first name people kind of jumped on was NVIDIA, for good reason, because they put up that big revenue print a couple of years ago. How else are you trying to play this?
So, I mean, the way we play it is the way most people are playing it. NVIDIA, some other chip companies, the very large companies with massive databases. You know, then the question becomes, you know, what apps and who's going to create them are going to work. And I think that is so early right now that it's really not worth talking about. You know, just as an example, the part of the business of Accenture that is doing extremely well is not the consulting side, which would do when companies are spending a lot of money on AI. It's the outsourcing side. And the reason why the outsourcing side is doing well is that most S&P companies do not have their data sufficiently in one place, structured appropriately to really even do anything with respect to AI. So it's very, very early in the AI story. The one longer-term theme that we've been thinking about, although it's so long-term, I don't know quite what to do with it yet, is I think there's a good argument to be made that we have seen hardware re-rate up and software somewhat derate. And I think it's possible that AI could cause that to continue, because it's possible that the cost of creating software because of AI is going to plummet. And if that's the case, some of the iconic software companies out there may not have moats around their businesses that are quite as high as they used to be.
Within the skill set that you've earned and at Neuberger Berman, do you people believe
the CapEx expenditure of technology is being done intelligently and efficiently, or is there wasted money being squandered away on AI?
I mean, I'm sure both. It's we won't know the answer to that question for years. So I don't think it's worth trying to figure that out at this point.
So how else do you think? I mean, a lot of folks are concerned about this Mag 7, this concentration risk, just as a market concern. Do you have this market structure concern that so much of this market is weighted towards these Mag 7, or is that beyond kind of how
Well,
you do that?
I think one interesting aspect of that, and I'll come to that, is that many active managers, probably more on the institutional side, underperform because their risk parameters don't allow them to overweight the Mag 7 because the Mag 7 is so big. And it's probably going to continue. I don't think we will really see a broadening out until we see apps come out so that some of the more middle companies can do that. But we're a ways away from that.
Do you have a favorite Mag 7? Is there one where you've got
I don't want to talk about individual stocks. I'm just not going to do that.
All right.
My firm gets me into trouble.
The firm gets you into trouble. You don't get yourself into trouble.
Never.
Okay, I got it. On the infrastructure.
Nobody's listening.
On the infrastructure theme.
Yes.
Do I go out there and just buy like Cummins engines and?
Well,
let
me talk about that because politics are important.
Okay.
So I think that there are 4 mega infrastructure themes, and then there's a 5th. The 4 are onshoring. The second is, improvement of the grid.
Yep.
The third is everything having to do with actually building the data centers, and that there's overlap there with the grid. And then there's greenification, and then there's all the bills that Biden passed to shove money into all 4 boxes. Where the politics can become important is, I'll do 2 extreme cases. If Trump sweeps, greenifications are going to get de-emphasized. And if Harris sweeps, greenification will get re-emphasized. So that's important. So the politics here are important.
Steve Eisman with us, and we will continue here. Let me do a data check here with markets on the move. SPX Dow at records. Dow up 540 points to the solid 42,000 print on the Dow. 5,700 SPX up 86 points. NASDAQ 100 up 2.2% with Steve Eisman.
Steve, how concerned are you, if at all?
We're not on right now.
What's that?
On?
We're on, baby.
We're on.
We're on.
Oh, it's for radio. It's hard to tell.
Yeah, the red light. We make it easy. The red light. When the red light's
red light.
On, yes, that's for me.
I just learned something.
Exactly. All right, valuation. How concerned are you, if at all, about this market broadly?
I think I learned this lesson in the dot-com bust. So, when dot-com was rocking and rolling, everybody was yelling and screaming about valuation. But that didn't matter until there was a recession, and it turned out that a lot of these companies had actually fundamental problems. So I don't spend, generally speaking, I'm not going to invest in a company that sells at 1,000 PE. That's just not what I do. But we'll invest in some high PE stocks. I just don't feel like it's, as long as the economy is fine, it's more of an academic exercise than anything else.
So the economy, from what we're hearing from you, the economy really is underpinning almost everything you're the foundation, I guess, of how you view investments.
Correct.
Okay. How about on the fixed income side? What do we do there? I can sit in a 2-year treasury. I used to get 5%. I'm still getting 3.6%. That's not bad for, like no risk. Or do I go out there and take some credit risk, do you think?
Look, we do some corporate bond investing, but mostly what we do is equities.
Okay.
I don't have a strong view on fixed income right now, one way or the other. I really don't.
Do you have alternatives in your portfolio?
I don't have alternatives either.
So
I'm just a stock jockey.
Stock jockey.
Stock
the
jockey.
old-fashioned stock
and I
jockey.
always have been.
Okay, we got to talk banks here and financial with Steve Eisman. Here's a quote. So yeah, I met with this retail banker yesterday, and I'm supposed to be getting him to invest in our fund, but instead I start grilling him about our overdraft penalties and how his bank lets a customer write 10, 12 checks before they tell him they're overdrawn, and this creep is making billions off of screwing over people this way. script
that
of a
sounds like a
fictional-
much younger version of me.
Yeah, it does. It's from the script of
a very angry young man.
A very angry young man from 2015. Can you buy New York big bank? Can you buy the future of Bank of America? You know, not individual stocks, but can you buy the big bank success of the future?
So let's talk about what the positives are. The positives are that the regulators did a very, very good job post Dodd-Frank, led by Vice Chair Daniel Tarullo, truly one of the unsung heroes of the financial system. The leverage in the banks is cut by more than half. Even within that leverage, they have been de-risked. So the financial system of the United States, as far as I'm concerned, is very, very safe, and I don't lose any sleep about it. And by the way, I sleep very well.
Right.
But do I think there's a great story to invest in some of the very large banks?
Right.
Not really. I just don't think there's a story there one way or the other.
Too important. I got to get this in. Lex in the FT today blistering about private equity and the ability not to cash out. Do you see potential problems within the illiquidity of private equity?
You know, you could spin any bad tale you want. There's just not enough data on what's in private equity to really know one way or the other.
You can't make that guess.
I can't make that judgment.
See that? You know, he's just, you know, his lawyers love him.
It's not his first go-round. It's not his first rodeo.
What do individuals
Oh,
stocks?
my lawyers love me. You know, one time, quick story, in the 90s, I was at Oppenheimer, and Oppenheimer got sued over something that I had written, and there was, you know, it was discovery, and the lawyers called me and said, send us everything you have on this company that you wrote about, and I sent it to them, which was only the reports that I had written. And the lawyer called me and said, what about your notes? And I said, I don't have notes. I don't take notes. He goes, I love you.
Steve Eisman, thank you so much. We love you too. Greatly appreciate it. Mr. Eisman is with Neuberger Berman. Some perspective there, given most interesting times. I wrote a message to our team. I mean, it's amazing. It has to go, Lisa knows this, it has to go through like a hierarchy of like 6 people to get down to the interns booking. I promise we will get Lawrence McDonald on here. My essay of the year for 2023 on the wall of money that is out there. He needs to redo that essay. Really looking forward to that. With the Dow up 470 points, SPX up 85 points. Paul, 2.4%.
Wow.
It's like, I mean, what do we do? Say wait for 2 p.m. when it sells off?
I don't know.
It's
it's an odd market. But again, I guess you had a lot of people sleep on this rate cut and kind of come to a Goldilocks type of review.
Two-year peg, 3.62%. But as Steve Eisman mentioned, yield's higher. 10-year yield, 3.75%, 4.0. Paul, I got to go down and look at gold up $2. $2,600 on gold. And people say to me, what are you watching? What are you watching? What are you watching? Here's what I'm watching out 2 months, 2 years. The dollar.
Yep.
Nobody's watching it. I'm sorry. It's technically BBDXY, the Bloomberg Dollar Index, well-behaved, weaker dollar, DXY, right now at 101, actually a churn to the dollar today. But I wonder what the price to pay is of all this good news that we see from Jay Powell. Please stay with us across this nation, Bloomberg Radio, and on YouTube. Subscribe to Bloomberg Podcasts.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks hitting all-time highs as the Fed's bold 50 basis point interest rate cut really reignited investor sentiment. Almost every major group in the S&P 500 gained. We have the S&P 500 right now up about 1.3%, 75 points at 5,693. We have the Dow up nearly 1% at 397 points at 41,898. And we have the NASDAQ up more than 2%, 381 points at 17,949. As far as the bond market, we have the 2-year yield 3.61%, down 1 basis point. The yield on the 10-year 3.74%, and that's up 3 basis points. Shares of Apple, they're up about 2% after that warning from the EU related to its Digital Markets Act. And then shares of Darden restaurants, they're up about 7% on improving sales trends. It also announced its big partnership with Uber for food delivery. That'll start with Olive Garden later this year. And since we've been hearing so much about unions and strikes, well, now union members at diner chain Waffle House say that they've been underpaid, understaffed. That's according to a filing. That's a Bloomberg Business Flash. Tom and Paul.
Legal action at Chez Waff?
Chez Waff.
Legal action. Do you know, I'm very proud to say I've never been in a Waffle House
No.
before 1 a.m.
Oh, okay.
There we go. There
Makes
we go.
sense. You had to finish that sentence off.
Usually if Danae's is shut down, you go to Chez Waff and Crackle Barrel, the Barrel to Crack was out with
up today.
earnings today.
Absolutely.
Surging, as they say.
Country boy breakfast.
Lots to talk about here. Thank you for the comments today. Just an extraordinary week here with great conversations and, you know, the back and forth YouTube live chat and all that, and out on Twitter. It's we love the conversation that we see across this nation and indeed worldwide. Good evening to all of you in the Pacific Rim. And I featured Tokyo today. There's a small matter of the Bank of Japan with a little bit of different calculus, Paul, than the Bank of England.
Sure, they're taking
or the Fed. Dow up 415 points. What an odd time. Joining us now, he was with us a number of weeks ago with Yale School of Management. Gautam Mukunda joins us now. His acclaimed book, Picking at Presidents. Let me just, is the stock market up good for Democrats or Republicans?
At this point, I'm not sure it matters for the election. The two parties bases are so calcified at this point that the idea that a sort of a serious Harris supporter or a serious Trump supporter is going to switch.
How big is your undecided?
How big is the pool of undecided voters? Under 3% at this point.
Under 3?
Under 3.
I haven't heard that. Wow. That's a wow statistic. Wow, really?
I would be surprised if it's much higher than that, yes.
Wow.
Has it always been that way?
No. So this is like a fascinating, the American political system is not designed to work with two ideologically homogenous, rigid parties. It is not. The last time we had something like this was the 1850s. That did not end well.
Yep.
The system is, the parties are meant to be not ideologically homogenous. They're meant to overlap. But now the most liberal Republican is more conservative than the most conservative Democrat in the House and in the Senate. We don't really know what this is going to look like and how forget about the election. We don't know what governing looks like over the long term in that kind of scenario.
I guess one of my questions for people that I would identify as traditional Republicans is, what happens when the time of Donald Trump passes?
Yeah.
What happens to the Republican Party then? Does the traditional GOP folks, do they reassert themselves? Or is this train left the station for a while?
I don't see how they could.
Yep.
And I think the biggest lesson from Trump is that the game that was played by Republican Party elites up through the 2012 election of sort of campaigning with sort of stuff for the base, but governing for elite donors. That was the basic thesis we got. It just doesn't work anymore. Now, Donald Trump had a secret that no one else is able to replicate, right? He is the greatest genius for earned media who has ever, whatever else you say about it, he's the greatest genius for earned media who's ever lived. And so he did not need donor support to run a campaign. And so maybe the next cycle around, but if you sort of look at the people who might conceivably be successors to Donald Trump, I don't see an establishment stool Republican who has any significant base in the party.
Go back to 1850.
Yeah.
I mean, you know, I'm pulling out Civics 101. Mr. Brunel beat it into me, and he's great. But, you know, you're talking the tension of Kansas-Nebraska Act.
Yeah.
The pieces that Douglas and Lincoln picked up. Do you equate the analog to the 1850s to the discord that followed a decade later?
Oh, there's no, right. The discord that followed a decade later came directly from the sort of stasis and paralysis of the 1850s, because every major national institution that united the country collapsed. Right, the last thing holding the United States together in the late 1850s was the Democratic Party, and when it split between Southern and Northern Democrats, that was it. There was nothing tying the country together, and it took a civil war to resolve it. We're not there. I'm not predicting a civil war. I'm not saying we're not in that scenario, but it is the closest historical analog to what we have today.
And the distinction here, and this is not original, folks. This is in the literature. Is the big distinction is that was a regional bipart. Now, within any given city, there is the separation city to city. I don't think the analog's there. It's very different this time around.
It's profoundly different. And so the easiest way to remember this is there are more Republicans in California than in any other state except Texas. Right? We think of California as the quintessentially blue state, but there are more Republicans there than anywhere else. So it's not as if you could have a plausible secessionist movement. And the other one is the economic disparity between those two. I mean, Texas is a red state, but the 4 cities that are the center of the Texas economy are all pretty heavily Democratic and would not be interested in that. So this is like, we're not seeing any prospect of a civil war. You might see a little uptick in violence after, if Trump won, that's not Trump lost, that's not implausible. But I'm not predicting that. What I am predicting is some more dysfunction.
Paul, the book on this, Greg Grandin, The End of the Myth. It was my book of the summer a number of summers ago. It is a spectacular book on the sense of frontier in America and how it's shattered in the modern day.
So we think about January 6th of the last election. Take us through November, December, January coming up here. How do you think that might play out? Because, boy, you could spin some crazy scenarios there.
You could, and a lot depends on the margin.
Okay.
If it's a few thousand votes in one state, then you can expect enormous efforts since the Democrats have said they won't do this. I don't sort of anticipate them if it's against them. Yeah. But if it's going in the other way, enormous efforts to try and overturn that state's votes. At that point, it kind of depends on what happens in the court system, right? The last time around, even Trump appointees just stood up and said, this is not going to happen, right? Yeah. He went 0 for 62 in the courts. It was a complete fiasco for him. Unclear whether he would be equally unsuccessful. Right. He has much less power this time, but the Republican Party is much more solidly under his control. So in the places where he does have power, they're more likely to cooperate with him.
Yale University, protests like anywhere else as well. Are the kids different this election cycle, whether they're elites at elite schools like you lecture and throw chalk at every day, or they're a given minority in a given swing state who all of a sudden's voice is really important?
And when I throw chalk, I try to miss them, but I'm a pretty bad aim, so there are no guarantees. So students at the elite schools are very different. The protests that you saw sort of over the Gaza war were concentrated entirely in elite schools. There was almost a flawless correlation between tuition payments and the likelihood of seeing the protests, right? And I always say when I say that is, whatever you think of the position, some of the rhetoric, obviously, by some of the protesters was completely unacceptable. And I always ask, how would you feel differently about it if the headline was 21-year-old does something stupid, as opposed to students at Harvard sort of protesting, which is no question about it. The students are different. And the big transformation that I observed was when Harris became the nominee. And we saw this across the country, but you see it when students, there was, whatever you might feel about Joe Biden, there was no enthusiasm in the youth vote for him, just none. Harris doesn't code that way at all. There is significant feeling. It's not 2008, but it doesn't feel that different.
Interesting. So, I mean, it's just, I guess, November and then December, January are going to be crucial.
I hope not.
Yes.
Right? I think, but I expect so, yes.
Professor Mukunda, thank you so much. Gautam Mukunda with us. The book is Picking Presidents, and he's given us some nice wisdom here along the election cycle. Paul, it's over. The markets have cratered. We're up 2.x%. We're now up only 2.2%. Dow was up, I don't know. Lisa, did we get over 500? I think we were up over 500 at one point.
Yes.
We're now up only 430. The VIX 16.61. I don't know what to make of it, Paul.
And Tom, your Bitcoin is up 4.5%. We're almost 63,000.
Yeah, do you have Alex Steele, or is it going to be a Matt Miller guest entrance?
I think it's going to be Alex Steele. That's how we're going to go today.
We'll see.
Yeah, tomorrow, we don't know.
Summer's over.
Somebody's taking a day off. I don't know.
80's done, like clouds in the sky.
Yep.
There's only one song. Mr. Henley, good morning.